Sorry, give me a second. I'm just trying to fix my camera. It's not working. Hmm. Win VTuber Gherk? I mean, we're pretty close right now. Ghost Gherk? No, I'm just trying to. I mean, yeah, for a minute. I'm just trying to fix my camera. I don't know what the hell's going on with it. It's like not coming up. Must be a new page here. If you want to, if we want to see you talk, do we have to pay more? Wait, what? All day you have to pay more? Oh, no. I'm just. Give me a fucking second. Oh, what a piece of shit. Huh. What membership level gets visual Gherk? Listen, man, I'm just trying to get the camera to work, alright? I'm not charging extra to see me yet, but that's a great idea. So close. Okay, it's turning on. It's a step in the right direction. Where's my face look fuzzy? Whatever. Fuck this shit. Is that working? Sort of? Yeah, I think it is. Okay. Cool. We did it. I need a new computer. I just bought a new video card. Okay. You can put a video card in your old computer. Maybe. You should have a Gherk Muppet head for when you leave to get snacks. That'd be a great idea. Have you been following DWAC? God, no. That thing's always been just a piece of shit. It's a great stock to lose tons of money on. Are you trying to pump Jensen's earnings? No. What donut flavor is JPow's favorite? I assume Boston cream or Cruller. Looks like a Cruller kind of guy. Maybe a glazed twist. You talk about how bad Chipotle is. It's not, I don't know. I haven't eaten there in like 5 years. The last time I ate there, it was awful. I can imagine it's only gotten worse. Definitely not a bear claw. No, he's not a bear claw kind of guy. A Jensen jacket would go well with your VWAP hat. Yeah, I'm not gonna go spend $4,000 at Tom Ford to look like Jensen. Although I can tell you, um, in the more affluent parts of Brooklyn, I have seen several like tech bros wearing his exact jacket. It's the cringiest thing in the world. Yes, they are absolutely tools. Yeah, I know about the Chipotle split. It's about time, right? It's like $3,000 a share. If you went long the video, you could have a jacket too. I'm long the video right now. Where's my jacket? I'm also short in a video. Can I not be both? The Huang Gang? Yes. Yeah, I know that Jensen and Lisa. So they're like distantly related, but yeah, I'm aware. Did you wear a vest when you were a finance bro? I own a vest. I don't think I've ever had the occasion to wear it. So this is like when all the Apple simps were wearing black turtlenecks. Yeah, if you lived in the Bay Area in the day, very similar. I just said I knew that they were related, Evans. You think flat down as we move into FOMC as puts and neutral positioning come in? I think that's a reasonable possibility. We'll probably just stay right here. There's still a ramp up to 51.90. I don't really know if we're going to get all that much price movement or not. A lot of puts have come into the upside also. And more are coming in. The presser's at 2:30. The decision will be released at 2. If JPAD doesn't do the right thing to fight inflation, actual crash by end of year, not necessarily, but inflation could move up significantly by the end of the year. It depends on how much of the wrong thing he does. I only sent that once. Don't yell at me for having European internet. All right. Isn't your guys' internet like really good? And cheap? What's up with DN being at 50.59? It seems like a large drop. Ooh, actually, I have the correct data set. That's kind of like the raw data. Hold on one second. I'll post the corrected ones in the pickles picks for this morning. There. But DN on SPXW is still at 50.68. That's where it's been. RARD data? Sure. I don't think those are that far off either. Like it shouldn't be a crazy big difference. SPXGN is at 50.98. What was the raw value? 50.69. Yeah, it's not that far off. Is it gonna get spicy when we lose 51.41 today? Maybe. I think it's gonna be pretty hard to short VIX down substantially. VIX future seems to be holding up pretty well. I can't imagine that they'd want to take the risk today. So I could see VIX kind of just chilling out around 14. Maybe we see like 13.90. Dollars above 104 though. That's the hard part, right? Is like you've got to short through the increasing demand for vol as yields are pressured higher. I think the 10 years almost back at 4.3 again. Correlation's still just crashing on the 1 month, and the 3 month is starting to follow suit. Carry trades getting levered up again. All of those things like tighten financial conditions and drive up vol demand, right? You think we get some beyond uppies this week? Possibly. How's it doing? It's like almost back at $8. Look at that shit. Still on reg show. Might move. Are you bullish on Bobby Q? Excuse me? That stock doesn't exist anymore. Is 5200 synth shorts as big as the 5K one? The 5K one's synth long, but no, not even close. More impactful at spot. So I can kind of show you guys why that position specifically, out of all the positions on the chain, was so intriguing. And it's because it's, you know, very calculated. It's a very it was a very intentional. Well, I mean, obviously, it was $80 million. It was a very intentional position, but specifically, it did one thing really, really well, and I'll show you what that is. So if we're looking at gamma, right? We move this out. Let's go. I mean, the number of contracts is kind of irrelevant, but the more contracts you have, the greater the effect, right? So it was like 27,000 before it rolled out. And we look at spot. Why is this upside down? Oh. There we go. And if you look at spot right here, which is roughly the price we were at when the position came in, look what it does to gamma. So do you see this massive dip? And then as time goes on, it crushes upside gamma even harder, right? And so, you know, yesterday when we hit this price and those started coming in, bulls were just going crazy. They were running around, liquid was spraying everywhere, right? Just like a big bull car wash. They were buying 80s, 85s, 90s, 5200s, zero DTs, all of them, right? And then this position came in and just blew up all their gamma. It just crushed it, and it was beautiful. And it wasn't until the end of the day when this starts to collapse and it got rolled out. Right? See if once we get past like into power hour, watch what happens. So the range becomes narrower, right? Which frees up price to move higher. And then you know it rolled out, and that was the end of it. Option strat. No. Plute said he got bonds, bro. Good for him. Could you see Bears doing that more? I mean, they bought some more synthetic shorts at the same price with Theta, like April 19s and stuff. Are you exiting the short side of Nvidia here or holding through FOMC? I don't know. I mean, it hasn't moved very much, right? It's down 70 points. Uh, so I have 95s. I would prefer it dropped a bit lower. Like supports at 880. So I think if I was gonna close it intentionally, that would probably be around the range I close it at. Otherwise, if it hits its stop, it hits its stop. How high can we go before we go into that delta neutral flat? Wait, what? Delta neutral's below us. When is price most likely to be crusaded? Today by delta neutral positioning. I mean, a lot of the neutral positioning for the FOMC meeting today is already on the chain. We'll see. We'll see some added here and there, but I don't think it's going to make a very big difference at this point. It seems like positioning's pretty equal. It's a little call side favored, but not a ton. It was much worse last night. Do they have calls up to 52.25 or are those sold? They could be sold. They're very short dated, so it's kind of hard to tell. Um, but a lot of them were coming in when we were kind of failing the run up yesterday. So it's very possible they were just sold out on the one DTE. I would say above 52.05, like zero DTEs are most likely sold. I wish I could stay at home and trade every day. I work construction and try to day trade listening to you with one AirPod in and doing my job. That'd be cool. Oh, I see. Well, make more money. We don't have to go to work. there's a lot of positions and strategies that can be used if you have a job and you can't sit and watch this shit all fucking day. Learning to set up and execute automated orders can help with that a lot too. I try. Well, that's more than most people do in their entire lives, so that's a good thing. What are some of the strats of which you speak? I mean, swing trading, which is, generally harder and requires more position management experience. Selling theta in, 30, 45 day increments can be pretty easy to manage, or at least easy to manage with like on an automated order setup, right? Where you have, protections in place. Sure, you might sacrifice some of your total yield, but um, you don't have to stare at the screen all day, right? Any upside resistances worth noting here? 75, which we're kind of above. 90. Stop trying to ask me where to sell your fucking calls. Setting up automated orders, that's the part I need to do. I still need to pick up another trading platform. Fair enough. Fidelity's automated order system's not bad. Fidelity sucks, but what is it, Trade Armor isn't too bad. Kind of weird to use, but once you get used to it. How do you feel about JPY hitting all-time lows? Yuta must be proud. I mean, it's not there yet, but it's getting there. I mean, the Bank of Japan's one of the reasons it's diving. So everyone's buying Japanese bonds, buying up all their debt because they're trying to push their central bank rate down. So effectively, the market is doing yield curve control. And also the dollar is just unstoppable at this point. I told myself I wouldn't quit my job until I'm easily making more than my current salary. Smart. Haha, those morons not losing money every day. Couldn't be me. Every single FOMC, I tell myself I'm just going to stay in bed until 2 p.m. And every single FOMC, I end up sitting here hating my life for 4.5 hours. I think it was the last FOMC meeting. I just started the stream at like 11 o'clock and I just slept in and it was glorious. I should have done that again. I forgot I did that. But this morning, there was some risk that we could move higher, right? We could move up to like 51.90 in the first half of the day. Can you share more of those 30 to 45 DTE theta strats and pickles pick? It seems so difficult to manage given how irrational the market is. I mean, that's really depending on what stocks you pick, right? When you start selling more theta, you don't have to necessarily target stocks that have high volatility. And obviously the high volatility encourages you to sell theta on it, but then it's hard to manage, right? So you can pick things with, you know, less aggressive vol, especially if you're selling like 30, 45 days out. You can move down to like 20, 30% IV stocks where it's not nearly as crazy. 2 weeks ago, I made 2,700 on SPX zero DT calls by using a take profit stop loss. Yesterday, I tried the same thing and lost $1,000 by hitting my stop loss before the run to 51.74. Ouch. I mean, that's entries. You got to work on entries. Did you take profits on TLT? It came super close to the price target. I've taken some profits on it over the last 2 weeks now. I still have some open. I opened other ones, so I have like downside price targets following today's FOMC meeting too. I don't think this is gonna turn out dovish. If it does, that's gonna be awful. I hit some black ice on the road this morning. Oh no, the Gherks would be without a father. You need to be careful, Pterodactyl. It reminded me to appreciate the good things in life, like how immensely ruggedly handsome you are. I mean, thank you. I got stopped out 6 cents below the bottom tick before the contract's 3x'd. That happens, yeah. I made 200% on DWAC. Good for you. And the rest of the position is house money. I'm thinking of putting it into something logical, like fake meat calls. Ew. You gotta get a good entry from my experience for those to be successful with things like zero DTEs. I mean, yeah, zero DTEs are kind of their own beast. Who are you kidding? Greg still looks like Silent Bob. he's a handsome man. Any thoughts on puts on Upstart? I have puts on Upstart. They're for like June. Like more puts on Upstart at this price? If the Fed meeting's really hawkish, it could be worthwhile. Upstart's starting to get pretty fucking illiquid though. How am I getting emotionally attached to a hawkish Fed? $2.9 million shares available on Beyond. All the better to cover with, my pretty. I spent too much time here and I'm starting to have Gherk berate me in my dreams. Gherk is the paragon of rugged handsomeness, and you need your head looked at. What's a better investment? Top next weeklies or Powerball tickets? They both suck. Which stocks do you think would be most impacted by a hawkish stance? Everything. I mean, Mag 7 and like the top 15 NASDAQ 100 stocks are probably the most at risk since they're so wildly overvalued, but small caps would get hurt pretty badly as well. A lot of the bullishness we've seen in small caps is due to the assumption that some rates will be cut before the maturity catches up to them and they start going bankrupt in droves. Thanks, Proven. The time to full port packs? I don't think so. Although it's getting kind of cheap. Would IWM be a better short than QQQ or SPY? If Fed is hawkish, IWM not at all-time high, but it's way more sensitive to high rates, right? I mean, technically speaking, NASDAQ should be more sensitive to high rates than IWM. but IWM has a much larger short position on it, and so I would say as far as price realization in the short term, it might overperform briefly. Tesla no longer on Reg Show. No upside pressure anymore on Tesla from this. Mm, so I'm not sure that Tesla provides upside pressure while on Reg Show. I think that would be more due to excessive shorting. Do you think they push 5200 still, or the call's just not there? Well, a lot of puts came in, and then specifically a lot of puts at 5200. So I would say that there's still a bit of a ramp from like 75 up to 80, 90, or yeah, 90. Um, but unless we hit it, I I think there's a good chance we just kind of stay where we're at. Like defensive positioning is built up on the put side from 80 to 5200, and quite a bit of it too. And we also have kind of a decent put ramp from 75 down to 60. So, and we're right in the middle of that right now. We're right in the middle between the defensive puts and the put ramp. Generally, when you kind of fall into those little pockets like that, price stagnates a lot. So it's not impossible for us to break up and test 5190, and the call side is slightly favored, but it would be difficult, maybe even a bit grindy. Is KView good for condors? Short strangles? I mean, just understand that a condor is a slightly worse short strangle, right? Like it's like a less profitable short strangle. I mean, KView has just not a lot of volatility. I haven't sold short strangles on it in like a couple months, but yeah, it still doesn't fucking move much. And so like a condor on that, here. Oops. Uh let's say something a little more reasonable for the weekly. Something like that. Boop. God, it's kind of shitty. You really need to go close to the money here. Yeah, they're just maybe you go 19, 20, 150, like 30 DT, $15 credit on 35 risk, so like 41% versus uh what the fuck is the here? That's the wrong one. Do they have short strangles? There we go. These are a little better. These kind of suck too. I guess if you do like that, it's not too bad. But and they're not great. Probably not a lot of management. 8% for 30 days. Pack's interesting here. It's still a little bit above my price target. That synth short either knows we're gonna rug, because if that thing blows up, we're gonna rock it to 6,000. No, we're not. But if it closes, it could push prices up since it's in the money. Airbnb might be decent if rates aren't coming down. Yeah, and if rates are going up, I would say REITs, like shorting REITs, can be really good. TLT, obviously. High yield corporate bonds. Those are all possible shorts on a hawkish Fed outside of, the index stuff. I missed the morning exit on my QQQ 43 439Cs. Do you think we see another bump before FOMC or cut to avoid theta burn, 0 DTEs? Did you only have the call or did you have both? I mean, we could potentially see a bump, but it might get crushed. I think the assumption going into FOMC should be that things will remain relatively flat or stable, right? In the money cover calls on O. I mean, I don't own any, but yeah, that would be an option. O's been shit in the bed pretty hard with just financial conditions tightening, right? The, you know how I track O is I just pay attention to what the morons are doing over in our dividends, and when they all start freaking out and being like, "I finally gave up after 10 years" and shit like that, that's usually a good price on O. How'd you manage your SEX straddle this morning? I haven't. I've done no management. Real question, do you think the market will do anything odd on Eclipse Day due to so many people stopping to watch it? I don't know. Really? What about a python chokehold? Hmm. Depends. Is it on a zebra? Careful shorting REITs. We're all preparing to scale up and deploying preferred equity with billions of dollars have been on the sidelines. The general consensus is lever the fuck up through December 2025. So they're all gonna crash. Is that what you're saying? Lunar black swan event. Where does the BOJ step in to stop their currency from melting down? I don't know. 152, 3, 5, 60. There's no more stops, right? It won't happen because trading algorithm doesn't care about the eclipse. It's true. Did you hear that Robinhood is going to allow futures trading too? I did not, but that sounds terrible. Hmm. Let's see here. Um. So if we get up to 85, things are pretty neutral. Still a lot of upside exposure though. Hmm. Interesting. Hold on one second. I'm just trying to get an idea of any changes in positioning here. Um, oh, that's fucked. Okay. Great. I love how every time there's like a big event, there's issues with data. So pretty decent support below 75 at 5170, and then there's a resistance to the upside at like 82, and then 90, 93. As far as momentum goes, a little bullish, but not very aggressive. And after we find a top here, it's probably going to start shifting the opposite way. That's curious. 45 per day returns found a new high. Very blown out. So you were forced to buy a single stock for the rest of your life. What do? Ew. I, I wouldn't. That's not real. Resistances aren't very resisty. Okay. I mean, they are. How much theta do you buy on your FOMC straddle positions? I have a longer dated straddle right now for the end of the month. And then I'll probably pick up some zero DTE ones as we get closer to the meeting. Do you see us pulling back to the low 511s on SPY? It's possible. What happened to your gold position? It's in the other account. This is a position in gold miners, not gold directly. It's a little bit different. IWM's getting a little pumpy. So it's QQQ. Oh, if that guy is sitting on the dead QQQ call, might get an exit here. Hitting 5080s starts to put us on that ramp up to 5190. Yeah. There's still some defensive puts, but I don't think it'll make a huge difference. A decent number of out-of-the-money calls are taking some profits. But this is what I was talking about with they might push up before FOMC. It's just, yeah, like I said, very grindy. Wouldn't a gold miner just be a dwarf? Ha! Yeah, Ivy is pretty high. It's probably not going to get better either. It'll keep options pretty expensive all the way through. Jesus. What's the most realistic, not best outcome from FOMC? I think they pull back one or two rate cuts. They leave 2025, 2026 projections roughly the same, just moving the third or second and third rate cuts out into early 2025. And then I think GDP adjusts higher. I think this will buy them enough time and keep financial conditions tight enough till the June meeting where they can make another assessment on inflation without stimulating the wealth effect too much. Anything short of this is probably not only going to be super bullish, but is going to further ignite the growth that we're seeing in inflation. I can't see the things you're saying, Cobra, because you've betrayed me. Coming to theaters near you. Gold Miner's Daughter. I think that's the most realistic outcome. Their best path would be remove all rate cuts. Warn the market that they may need to hike. Move cuts to mid 2025 and project the current rate, like the median rate, out into beginning of 2026, so like the 3.75. This is what they should do. Yeah, we could use some bank failures, though. If our banks are going to fail because the 10-year hits 5%, they deserve to fail. I'm waiting for JPOW to be hawkish so I can make my re-entrance. Dick. Some men just want to watch the world market burn. I'm going straight to Barnes & Noble to buy a book about Volcker to send to JPOW. You should buy him a book about Arthur Burns. Two dojis on the weekly for SPX for SPY bearish. Don't ask me questions about SPY. If you're gonna look at the index, look at the index options or look at futures. SPY's just an ETF. And no. Two weekly dojis is not necessarily bearish, it's just indecisive. Beyond is still on reg show. Does Arthur burn because he has chlamydia? Okay. Have you ever watched Spy Kids? I've seen it. One of them, I think. Be my voice of reason. I should just wait for the Fed to straddle. I shouldn't play up until then. Too late, bought puts. God damn it. I see 18 bearish engulfing candles on the one tick. I'll be less excited to resubscribe. I feel much better hitting Pigeon Whale again on big red 50 BPS drop candles. You're dead to me, Cobra. Do you think today's FOMC meeting is extremely important in determining how the market will be moving for the next couple of months? Absolutely. BNED MOASS, I guess. Is it? No, it's only up 11%. Don't actually look at it though. It's too late. I'm looking at it right now. History remembers Arthur Burns as the 1970s Fed chair who let inflation run rampant. His name has been invoked recently in the financial press as a cautionary tale. Yeah. Can you share some general knowledge on setting stop limits? I mean, as far as where you set them when you enter a trade, how to adjust them, what? What is this? A MOASS for ants? Well, we tested what? Like, what is this? Like 80, 84? 90s resistance. So we could still move up a little higher, although vol's picking up on the rejection, so maybe we'll get a pullback. Yeah. Further pullback. Longer term momentum hasn't really shifted over yet. If rates hit 5%, my credit cards will become too much for me. Dude, rates are already at 5%. So to keep the market just flat, JPO would need to come out in one of those half dress, half suit things and switch which side when he answers questions devishly or hawkishly. Ooh, that would really let market participants know how he feels. I forgot to like the stream yesterday. Will the Colts ever forgive me? I suppose we could. But you will receive one demerit. If you had a non-human VTuber, what non-humanoid form would you pick? A shrimp, peener, duck? Oh, Jesus. Cobra is BFA confirmed. JPEG's gonna be dovish with a hawkish warning about no rate cuts or a raise. He warned about a raise at the last one. It didn't do shit. I bet Gherk has a fountain pen collection. No, but I do have one nice pen. It was a gift from a promotion. It's a Mont Blanc. I can't figure out how to get ink in it though, so it just sits in its case. Stop limits when you enter a trade. Are you setting them on every trade? You should be. Is there a general rule you use in regards to where you set your stops? No, it's dependent on a lot of things. The strike I'm buying, the liquidity of that strike. Is that strike being actively sold? So maybe spend a little time watching the spreads, seeing if they stay tight on tests, or if they loosen up a lot. There are some minute adjustments that you can make to prevent getting stopped out too early. Obviously you don't want to just throw like a bunch of commissions at the market maker, but a lot of setting a stop is dependent on your entry, right? If you have a shitty entry, you probably need a looser stop. If you have a really good entry, then a tighter stop is sufficient. It's a bit trickier on zero DTEs. And then, if you want easier stop loss management, buy one DTEs or buy in the money options. But sometimes, like, you can buy, say you buy the 5170 put here, right? And it's being really heavily sold by bulls because they're trying to stabilize at the 75 strike. The volatility of the premium on this contract is going to go up, right? Which means that it's going to trade in a wider range. Here, I can even I can probably even show you that contract right now, and this will be true. So if we look at this, and then we go to the 5170, doop. Let's turn on the regular candlesticks here. Oh, they are. Okay. Actually, liquidity is not too bad in that, but you can see on like the 75 test, it gets sold off really hard. And you'd think right here that that contract would be stable or going up, right? But it's not, because someone stepped in and sold what 30 of them on the test of 75, and this is like probably not as unstable as something further out of the money would be. Like if you went down to like the 5165 or 5160, this effect would be more pronounced. And I can kind of show you that too. Hold on. So say you have the 65. Right, this one's more gappy. The sell-off's a little bit bigger. Volume on the sell-off is higher. The range for the sell-off is greater. It's like this, the contract value dropped almost 4% on the test of 5175. And then, the 60 is probably even worse than that. Actually, that's not as bad. It dropped more over the next two candles, though. So this one keeps being sold. Right, and so understanding that can make a big difference. Avoiding it, you can go in the money. So you could go to like the 51, say the 5180, right? And this is going to be a lot tighter. This only dropped 2%, and it's far more stable on the bounce, right? So that's another consideration that you can make. And then obviously, you want to adjust stops appropriately for these. Usually when you enter a trade on an options contract, if it's out of the money, I'll do like 20%. If it's in the money or at the money, I might do like 10-15% on the initial stop. But a lot of it's how you adjust them, how you scale out of the positions. Sometimes you have like 3 contracts, so you can set a stop on 2, right? Adjust your stop higher and then sell the other one when you reach like a local high or something like that, and take profits. And then you can pull the stop back to the last contract, sell the second contract. You can kind of slowly scale out that way. I had a customer who worked for Mont Blanc. I guess one of our support agents did him a solid, and he sent us 200 pens. Jesus Christ. Tells you something about luxury pen margins. Oh yeah, they're absurd. Are GME shares a buy if they go down to 12? Ugh. If you want to. Okay, now BNet is kind of ripping. 9 cents, very cool. Yeah. I like in the money 0 DTEs. They're way easier to manage and ultimately make almost as much money on a good move. Yeah. They do a little, they perform a little bit better than the 1 DTE out of the money. But yeah, I mean, you're just playing delta, right? You're playing delta versus gamma, so it's like trading shares with leverage. It is a lot easier. What if you only trade single contracts typically? Should probably move to an instrument where you could trade multiple contracts. There's huge advantages to scaling. Both scaling in and scaling out of positions. And doing that on SPX is very expensive. No problem, Tycoon. Are Apple shares a buy if it goes down to $12? I think if Apple goes to $12, no. They're probably not a buy. Bears actually finding momentum? I don't think so. Maybe 75, maybe 70, but not much beyond that. Not unless they reposition significantly. BNet should sell the pickle jar's favorite doorstop. Options is a strategic investment. Can you whisper to Microsoft and tell it that it's a good boy and then it could go up? I wouldn't expect Microsoft to do anything interesting today. Interest on Microsoft has been pretty muted lately. It's not been doing a lot. Kind of just trading between 13 and 20. Also, this doesn't look bullish, but besides that. Is there an equivalent to SPX that is cheaper and as volatile? Well, so on the cash settled side, there's XSP or E-minis. Those are probably micro. Yeah, micros. Those are probably the best for the pours. On the non-cash settled side, SPY QQQ. A lot of people trade these. They're fine. They're shittier to sell options on, though. You can't really sell short-dated options on them because of pin risk. I messed up and I'm the accidental MM for SMCI 300Ps. This thing's gonna rocket to JPOW, isn't it? It could. What's pin risk? If you sell a spread. It's the distance between the sold strike. Wow, either the area between both strikes. So in cash settled instruments, options settle for cash, right? But on regular stocks, SPY, QQQ, if you fall into this range, right, and your sold option is in the money, and your bought option is out of the money, you can get assigned on the sold option. Now, a lot of times this doesn't really matter. The next day you can just get rid of the whatever you got assigned on, right? But it can matter if you don't have sufficient margin to cover the exercise. It can also matter if the price moves significantly overnight. So say you get assigned on something and you end up like short 100 shares of Microsoft, right? Because you sold a spread. And then overnight Microsoft goes up $15. No, you're fucked, right? You're gonna lose a lot of money when you go to close those shorts the next day. Even if, say, for instance, your bot option, protects you from the $5 of that, it won't protect you from the rest. SPXX and SPXL, a terrible idea for volatility events like FOMC. So, a problem with a lot of the leveraged ETFs right now, and this isn't always true, is that the long ETFs are massively outperforming the short ones, right? So, SPXL is at 129. SPXS is probably at like 15 or something, or 10. 9. Right, so notionally, these are not going to have equivalent moves, right? A 3% drop here, which would be a 1% move in SPX, is going to be what, like $3, $4? It's gonna be, yeah, $4. Whereas a 3% move to the upside on $9 is 30 cents, 27 cents. So these aren't equivalent, which leaves you in a position where you can only really trade the long leveraged ETF, like SPXL or TQQQ. And you could straddle this instead of straddling like SPX or something like that, right? Yeah, eventually they'll reverse split SPXS. They just haven't yet. They haven't reverse split SQQQ either. They both need to. Over 3 million shares hit the GME lending pool. Cool. What's your point? The lending pool that you can see. But it's not relevant. Short shares are infinite. There's no cap on the number available. Especially, and you're only looking at just a fraction of the lendable share market. Give me 1 sec. All right. I hate Carvana so much. Why? It's back up at 85 again. This has been pretty fun to sell spreads on. Let's see. Carvana falls back below 80. That's pretty bearish. Call aside interest has been dropping off pretty hard on it. And Delta's been kind of collapsing. Carvana actually looks really bearish. Although I've found in the past that it's very difficult to sell like spreads and the money on it. Hmm. Even out of the money. Jesus. Actually, that's not bad. 50 cents on a dollar. There we go. Like, if you could sell that for 60, 50? Hmm. It could be interesting. What if puts on this are worth it? Jesus, they're so expensive. Even the weekly puts are super blown out. Well, Carvana does not want higher for longer. I can tell you that much. I know you don't play earnings, but my one coin flip trade this week will either be Nike puts or Lulu calls. Either of those more interesting to you? I mean, they're just coin flips. You're playing roulette. SPXL might not be a terrible idea for this afternoon, or better off sticking to XSP SPY. I mean, it's probably cheaper than XSP and SPY. Also, you have to buy weeklies. You can't buy zero DTEs on it. Yeah, it's a bit more expensive because of the theta. As far as the returns, it's probably not going to matter much. Options prices move the same way on levered ETFs that they do on indexes. So 10 XSP contracts would be as profitable as one SPX contract. Roughly. You have a lot more slippage on XSP than you do on SPX, though. WeBull doesn't have futures trading yet, according to WeBull. I don't understand why bulls have to save their calls that are out of the money. But what about bears? Bears just close their puts. That's why we go up. Well, sometimes why we go up. Generally speaking, there's not a lot of bearish positioning on indexes, right? Most of the bearish positioning is like sold calls, and most of the bullish positioning is sold puts. There's very like institutions are very rarely buying calls and puts. Last FOMC I traded XSP and I struggled to get fills on big moves. Yeah. That can happen when the contracts go in the money. It just doesn't have a lot of liquidity, right? Hmm. Hmm. Uh, resistance is getting more concentrated around the 80-85 level. Support at 75 now to the downside. So we got some call buyers on the dip. We got some put buyers on the bounce. Looks like we're still pretty locked up here. Yes. Doesn't really have any significant resistance to 5250, which is just a little, what's like 5188. Ish. Option strats always had paid versions. XSP0 DTs are kind of tough, but I've enjoyed it as a poor man's SPX. Fair. Streamcard is awesome. Props. Thanks, Wabib. QQ Sugar chart being so flat with a little blip getting slapped right back into the same channel is pretty funny. Yeah. Might do it again. Are you prepared for the crash? I mean, I have a pretty good amount of Vega puts. So if the market were to crash right now, I'd do all right. And my straddle's open until the 28th, so I have a chunk of out the money puts too. When Pickle Financial app hits the app stores, we'll have a meme section, Twitter section, YouTube section, video games area, a little section for market data hidden somewhere. I don't know what you're talking about. Uh, I pigeon whale sometimes, and I demand to know about the Pickle app. If the market crashes and my 2-3 DTE TLT 125 C's prompt, sure. I mean, if Powell like cuts rates or something, like if they cut rates in an emergency, maybe. I'd rather have Gherkin as a hedge fund owner than a governor. I don't want to be the governor of anything. With JPO talking so late in the day, is it possible we don't see a lot of change in SPX after the decision is released? It depends on the decision. I mean, generally speaking, for FOMC events, you get kind of like drift before the event starts, and then when the decision's released, you get like kind of a volatile spike, and then that'll either settle to the up or downside. So say it settles down and the decision's kind of hawkish, then it'll wait out, the presser, and then you can, if the presser is not as hawkish, you can drift up or kind of drift down into the end of the day. If the presser is super fucking hawkish, this could just keep dumping. If it's super dovish, you keep rocketing up. But generally speaking, there's a lot of volatility surrounding the closing of neutral positions. That's why you get this thing. What's our worst case scenario, and how far of a downside could we see in that scenario? Powell raises rates 4,600, 4,500. I have a condor from earlier this week, and I'm trying to decide if it's safe to expire. Probably not. You probably shouldn't have sold it into today. I'm thinking J Plow reprises his classic performance of Jackson Hole this afternoon. He really should. Thank you, DJ, by the way. If J Plow comes out and says no rate cuts in 2024, we will see 5,000 before next week, won't we? I don't know about 5,000, but we could fall under 5,100 pretty quickly. 5,000 is kind of its own beast at this point. I'm not really sure how that would be managed on approaching it. It's so massive. It's like over 1.5 million contracts. We all know Daddy J won't raise rates, and we see the storied 56.9420. That's a possibility, and unfortunately, it shouldn't be an option. But unfortunately, we've seen him do things in the past that are almost just as bad, right? So I would say that if that happens, be prepared for inflation to hit 6 or 7%, maybe 10. If super dovish, will you cut your Vega puts today? Hmm. Huh. Would I? Maybe. Some. Not all of them, but some. Is BNet about to squeeze? I don't think so. It's just moving up a bit. It's up like 14%. Everyone needs to relax. I love how all the comments yesterday were is BNet dead? And then today it's just slightly higher than where it started yesterday. And everyone's asking if it's gonna squeeze. Sometimes you people are fucking insufferable. As theta ticks off, IV ticks up, options price remains the same. Bullshit. Nvidia is not helping the bulls today. No, it's not. It's also not printing the other side of my straddle. The shrimp dead. It almost went under a penny yesterday. I hope so, so I never have to hear about it again. Watch there be like one dot and 6 cuts, and every other dot is no cuts, and we rock it. Fair. Nvidia got like 8 upgrades today, and the bulls still can't get it to move. Yeah, it's not very strong. That one dot would be JPOW. Yeah. I'm still convinced that he's always the bottom dot. I think he's the biggest dove in the room. He always looks so pained anytime he has to do anything hawkish. Like someone murdered his puppy. Job security. Are we just posting random tickers in chat, Katie? I'm so prepared to buy calls when doves lie. Roland 808 drums with a synth. Let's go. Okay, so while I was out on paternity leave, I had a lot of time to think. I ran the dollar parity chart through an ARIMA model, but removed historic outliers. Still 1-to-1. I need more data. Well, you could just try comparing two different things. JPL needs to realize he's our Fed chair and not our neighbor. He's not your Fed chair. He's just the Fed chair. A guy on my futures Discord was ranting about JPOW being in cahoots with the government yesterday, and he lost his mind when I told him JPOW was a Republican. he's like a long term, like a hardcore fiscal conservative. JPOW's a Scientologist. And a wig. Don't talk. You're gonna get Fluffy started. I have a bunch of savings. Would it be smart to put it into VTI or VU so that it grows better than whatever the banks are giving me? Well, I mean, you're also taking the risk that it just won't grow, which is dangerous right now because we have a lot of economic uncertainty. But cash is still paying pretty great rates. 5 1/3's not awful. That is theoretically better than the risk premium on VU or VTI. Literally all my money is in an MMF. I know. Not to get political, but neither side is fiscally conservative. That's true. I'm not going to disagree with you. I don't even think that's political. I'm pretty sure everyone's well aware that whoever's in power is going to spend in line with their interests. It's no secret that Republicans spend just as much or more than Democrats. No one cares what the other governors have to say, dirty little toe beans. Actually, we don't have a budget. Haven't had one for like 6 months. The difference is just where it gets spent. Yeah. It's the secret to half the country, Gherk. No, it's not. Kanye wants to get rid of stairs. You know, at this point, I'm not sure he's the worst candidate. You grossly overestimate the intelligence of people. Benefit of the doubt? I feel like you're better off assuming that people are slightly more intelligent, right? Well, maybe not. In some instances. I mean, I've seen TikTok too. I'm well aware that the average intelligence is embarrassingly low. But our schools aren't good. You know, maybe it's not necessarily their fault. They could always be taught. How much is rent at your place in New York City? 3,600. You can't teach common sense. True. Some people don't have the capacity to be taught. I guess. I use smart brain go burr because of how smooth my wrinkles are. Thoughts just cruise over them. Sometimes you can pull them up a level of intelligence, or they pull you down. It's definitely the latter. Good morning, Gronk. I know you're not the real one today. You told me in the Discord. But why do I have to send my social security number to find out? I don't know what you're talking about. 3,600? Wow. We paid 3,900 for a one bedroom in 09 in Manhattan. Yep. I mean, I rented my place at like the bottom of the COVID market. So I got it really, really cheap. I think the guy who rented this before me was spending like 5,500 a month on it. And now it's like 7 or 8,000. I want to be able to afford to buy a house without taking too much from my savings. Okay. If you get on the built Wells Fargo card, points for paying rent, literally worth it for anyone with high rent like ourselves. Interesting. I just use my Amex. Pretty sure I get points for it too. But I'll double check. I think I get points. Do you think paying rent is just throwing away money? No. Your landlord hates you. Yep. Did you rent out your Long Island house yet? No. I don't want to deal with renters. Fuck that. I don't want to deal with Airbnb. I don't want to deal with renters. I don't want to deal with property management companies. Also, nobody's gonna rent that fucking house. It's ridiculously ostentatious. Anybody with enough money to rent it is just gonna buy it, right? Like, no one wants to rent a place on Long Island for $12,000 a month. Do you have any resources for learning about rent versus home ownership? Calculators are really useful. My landlord's far from poor. He owns like 20 other units in this building. No, I think it's this building and the one next door. He might actually have fewer in this building. Buying a home is generally not the smartest way to maximize your return, but it can be good for the average person who would frivolously spend the cost difference or hates moving. Yeah. I'm at 3,300 here. Built Waves transaction fees. It's $1.1. Our place is going to 5,000 now, and we're also got in at June 2020. Ouch. Yeah, fortunately for me, they can't raise my rent, but that fucking sucks. Holy shit. Yeah, but I'm in Manhattan, so I mean that's a big difference between, like, you know, being, that's just a penis. There's no way to draw it that's not going to look like a penis. You can't get rent. So there's two different programs, right? There's rent controlled, and then there's rent stabilized. Right. And so rent controlled is really specific. This is like you have to go through a lottery. Your income has to be under a certain level. These are usually in like Mitchell Llama housing or like projects. Rent stabilized are just individual units all over the city. And each building will have a couple of them, usually, if they want to reduce their tax liability. And so these are kind of like the two main programs. There's a couple other ones also. There's like HUD housing and some other shit, but these are the two big ones. This shit is stupid cheap. It's like 3-bedroom apartments for like 1,200 to 1,600 a month. Um, it's absurd. But your income has to be under like 120K. Rent stabilized generally goes to like low income individuals, and then there's like an internal lottery in the building, and then if you rent them out to somebody who doesn't qualify, you're supposed to put an addendum in the lease that they are not renting it as a rent stabilized unit, which protects the landlord from, you know, the laws that don't allow them to raise rents, right? And so what they did with my lease is they fucked this up, and they rented me a rent stabilized unit without the appropriate clause, and so now I have like a $3,600 a month rent payment, and they can only raise this like 2% every 5 years, and I have right of first refusal for any renewals. So basically, I can renew my lease forever, and it only goes up 2% every 5 years at most, which means they've locked the unit into the lowest rent prices in New York City since like the 1950s, 70s, late 70s. I also don't have any sublet agreement, so I can sublet the unit too. Yeah, Santa Ana has rent control. I mean, the state of California passed some laws on rent stabilization. LA has it too in certain places. But yeah, yeah, Irvine's fucked. The owner's going to get you taken care of if you're not careful. He's not like, I mean, he's pissed about it, but I'm sure that he has recourse in suing the management company for failing their fiduciary duty, right? So he's not like mad at me. I mean, he wants me out, but he's not mad at me. He's actually been pretty cool. The management company fucking hates me. Did your lawyer find it, or did you pass the bar already and you are your own lawyer? Actually, I didn't even know about it in the lease until I did my taxes. And my buddy was like, "Hey, man, you know you're in a rent stabilized unit, but there's no addendum." And I was like, "What?" Um, and then he kind of explained it to me, and then I went to my lawyer and asked him about it, and then found out about all my rights. I'm sure the management company is going to eat the loss. Yeah, yeah. God bless America. Yep. I think J&J needs exit liquidity before it dumps. What? Johnson and Johnson? Nvidia's getting weird. No, it's not. I opened a new account and put $500 in with the goal of 10xing it in 2 months. Okay, so 500 to 5,000. Yeah, you can do it, but you got to take on a lot of risk. So the lower initial capital, the higher the risk you have to take in order to grow it quickly. So if your goal is 5,000 in a year, you don't have to take as much risk, right? But if you want to do 5,000 in 2 months, you're gonna have to take quite a lot of risk, and odds are heavily against you. The chance of blowing up the $500 is far greater than the chance of turning it into 5,000. Even with a $10,000 account, the chances of blowing it up are pretty high with that short of a time frame. Like 10,000 to 25,000. Chances are above 100%. No, they're not. It's possible. I've knocked this account down to like $300 a couple of times and gotten it back to 10 grand. I've never blown up 12 10k accounts. Now, what's the other lie and then the truth? Never have I never. I'm in Ontario, your northern neighbors, and I've stopped paying my rent today. There's nothing that can be done by anyone, cops, landlords, courts, etc., until a hearing 1 year from now. Sounds like a great way to save for a house. Also sounds like it's terrible to be a Canadian landlord. Did someone say unaliving an account? I'm here. What's up? No, I've only done 11 and then one 75K account. Oh, okay. So you want to watch Don Lemon try to interview Musk? I can't watch Musk interviews now that he's on just copious amounts of ketamine. He just rambles aimlessly for like hours. Not that it was much better before, but it's worse now. I don't think $500 will buy any SPX options. It can, but you're kind of committed to trading the end of the day only. With total losses last year and the prior year, it's trying to tell me I have a problem, or else I better start using better risk management or give up. I mean, I can say definitively, Maeve, that you have made some egregious errors in the last 2 years. But I hope your risk management's been getting better. Your problem is, I mean, very specifically, that don't feel singled out, but because a lot of people do this, is you try to chase big gains way too hard. Usually it comes from a psychological perspective of needing money, which is very dangerous. I feel attacked. I feel targeted. I do that. Oh, Jesus. I see this one position to 100x, and then I wipe out all my losses. NVIDIA 180s were the last time I blew up a port. I still wish I'd sold those the day before earnings. That's what happens when I break my own rules. I was up like 40%. Can't say I've ever been there. 1,000-yard stare at Tesla. It's like psychology is universally applicable to humans. Mind blown. It's a problem. It's not one that's hard to overcome. You just truly have to only risk money you can afford to lose, right? There's a really, really fine line between being a trader and being a gambler. Um, and it takes no small amount of willpower to avoid crossing it, right? I honestly think that might be the biggest barrier to people being successful at day trading. I don't think it's the analysis. Risk management's just part of that, though, right? And then, but I think a lot of people just slip into being gamblers, right? Some people would argue that all day trading or short term trading is gambling, which I don't necessarily agree with. In 5 years, can I just give you a few milli and then you give me back 10 milli? 3 to 10? Yeah, that's, I mean, how long do I have? You want it quick? If you want it quick, yeah, you might just lose 3 milli. But 3 years, 4 years could probably be done pretty safely. It's 100% the psychology of holding versus selling that's ruined me in the past. My problem was instead of taking 10% profit, I'd take 50% losses. That's a lot of people's problem. I've had 240 in a Newport for 2 months, and I haven't traded anything during that time. My new goal is to turn that into $1,000 over a week or so. Move it out. Move it out. Or you're just going to lose the $240. You need more time. So your logic is if you win, it's trading. No. But that helps. You mean as far as why trading isn't necessarily gambling? I think that markets are inefficient. I mean, that's the root of it, right? Is that if you can identify inefficiencies in the market, then you can drastically improve your statistical performance. I would say anything with a 50 to 60% win rate is gambling. Anything above 80 to 90 is trading. If you believe markets are efficient, then that theoretically shouldn't be possible. A screenshot on Wall Street Bets shows me I can turn 1,000 into 100,000 on TGen options. Well, it's the problem is it's really easy to have an option that's 10% up and say not enough. And it's also really easy on an option that's down 50% to say this could still happen. And this is the trap, right? If everybody in here sold every option that they had that went green and closed their losers at 20%, most of you would already be profitable. If not significantly profitable. Rate my strat. 2 million in treasury ladders. Wait till AI bubble pops. Go full port long view. Yeah. I mean, if the AI bubble pops at this point, we're looking at like a lost decade. You really want to be long view? I think you better be better off getting something with more substantial yields, like consumer durables with like 6% divvies or something. That's my trading style. Hold to zero. Sniping 5-10% wins can add up fast over a little bit of time. Very. Seeing the forest for the trees. What you put on the screen is me. I've been tracking myself how frequently I make 10% on a trade. It's 11 out of 12 times. Time 12 screws me up bigly. That's because you need 5 winners at 10% to cover 1 loser at 50. I don't know. I'm not paying attention to the price action right now. It doesn't matter until FOMC. Don't try to trade chop. What's up, Dead Rabbit? Welcome back. Real life hit me like a brick. I hope all is well. All is well. It's good to see you again, man. If you were a car, which one would you be? Make, model, year, color, please. 1983 Porsche 930 turbo wide body. Brown. Brown in color. Brown with red leather seats. Spicy on the inside, right? Just gotta pop the hood. Investing is also gambling, if that's the case, right? So all participation in financial markets is then gambling. Etymologically. Ah, see, you're trying to overtrade. Maeve. How bad's your turbo lag? Terrible. My fishtail all the time. What cassette is in the tape deck as you cruise? Just a single of Fast Car. By Tracy Chapman. Yeah. That's awful and I don't believe you. What 80s actress is in the passenger seat? Christina Applegate or Heather Thomas? Alyssa Milano is not an 80s actress. Also, her face scares me. It's like late 90s. Yeah, mid to late 90s. Hayek. I don't know. I wasn't even born yet. 1 second, guy. She was an adult. Christina Applegate was an adult in the 80s. She became an adult the day you were born. Yen's making me a little sad, but I appreciate the long opportunity. No, she was the daughter in Married with Children. Actually, she was only 17. Well, I was 3 years old, right? And it's just riding in a car. You don't have to sexualize it. We can own an 83 Porsche now. Why did this scenario time travel into the 80s? I don't know, but that's where we're at. I think you know that we do. Do you think the Fed goes and has a full day of expensive breakfast and lunch before the FOMC waiting to drop inflation news every time? Just look at their budget, right? And see if you can root out the catering bill. Ed O'Neill has a massive hog. How are you so sure? Who was my ultimate childhood crush? Kelly from Saved by the Bell. Not the other one. No. Oh god, not Screech. What was her name? Tiffany Amber Thiessen. Kimberly the Pink Power Ranger? No, I was never into Topanga. She's an annoying bitch, man. Topanga taught me everything about what I never wanted in a girlfriend. I don't like people with causes. Disgusts me. Kimmy Gibbler from Full House? Was that the like nerdy friend? What about Clarissa? No, but I'm trying to think what else. The yellow Teletubby could get it. The girl from Little House on the Prairie. Isn't that show from like the 70s? Alicia Silverstone? Eh. They think you're 50. Gherkin went to PS 118 for school? The fuck I did. I went to school in Manhattan. Whoa, I'm walking to school here. You ever really a man unless you cranked it out to Toucan Sam on the Fruit Loops box? I think that's just really particularly your kink, popcorn trader. The mummy chick, Rachel Weisz. She was I think she married Daniel Craig. She's doing well for herself. When was the last time you visited your old block in Bed-Stuy? I don't know, like 4 years ago or something. Jennifer Connelly is a living goddess. That's how. Lindsay Lohan before she went crazy. Actually, yeah, and Alicia Cuthbert. Turd nailed that one too. But I think I was already an adult by then. You just split it. It's all just synthetic ownership and swaps anyway. She married Daniel Craig. He's the ultimate Dan. He's like the king of the Dans. Who was the other super hot? There were two. There was another super hot one in the Mummy. It was like Patricia Velasquez, the one who plays the Egyptian chick. Whew, spicy. Eliza Dushku, she has that kind of like fetal alcohol syndrome thing going on. A lot of guys like that face. I'm not into it. Looks like you're getting stared at by a toddler with narrow eyes. Bro, what? A lot of people are alcoholics, man. This is America. A lot of them don't stop drinking when they're pregnant. Like Seth MacFarlane or Dylan Harper, his twin sister. Jamie Presley is. I mean, she's like Margot Robbie with bigger boobs. Eliza Dushku absolutely does not look like every woman in a West Virginia Walmart. Isn't she dead? Jimmy Presley? I don't think so. I love Trailer Park Hot Girls. All right, enough of this. This is why there's no women watch this stream. Let's talk about hot guys instead. Hot 90s guys. Joe Pesci all day long. That's fair enough. There's no girls on this stream because there's no women on the internet, as everyone knows. True. Oh, me first. Rocco Siffredi? Isn't he like a porn star? How do you even know what his face looks like? Brendan Fraser. Super hot guy. Jared Leto. Also complete nutcase. I was in love with River Phoenix. Antonio Banderas and Zorro. All right, yeah. Sam Heughan is the hottest man alive. Prove me wrong. Okay. I don't know who he is. If I ever go gay, Ryan Reynolds. That's a pretty reasonable one. Henry Cavill is obviously the best. Yeah, I mean he's pretty clearly a good-looking guy. James Franco is a man dime. Franco's babies. A lot of you seem to have some really repressed and very strong feelings about hot men. Jay Fresh, I have a thing for redheads. So does he. It's not repressed. Philip Seymour Hoffman. He seems more like relationship material, you know? A troubled relationship material. Tad Weaselton and How I Met Your Stepbrother. Greg, you're my pick for hot man. Oh, thank you. Whatever the beefcake is named that does Warhammer and acting, that's Henry Cavill. Superman. Matthew McConaughey. What about Val and Top Gun? Did anybody ever think that Val Kilmer is so much better than Brad Pitt? They both started in the same place, but somehow Brad Pitt made it bigger. Idris Elba, but I'm totally straight. Robert Downey Jr. No. I had a checkout guy accidentally graze my hand once, and we shared a long stare. I always wonder. You lean in bear or bull? I mean, I hope JPOW doesn't fuck our economy. But I'll buy calls if he does. Can you go back to women? I have an uncomfortable tingle. Vincent Cassell from Ocean's 12. The Silver Fox. How has nobody said Eric Bana yet? I will give you this. At least none of you said Orlando Bloom. As the only girl here, you're all adorable. Michael Sarah. You know, I actually dated this chick that was super into him. Like in an unhealthy way, like part of his fan club. Chris Hemsworth, too obvious. Aragorn, not Vigo, just the king. Gerard Depardieu. Every time I hear his name, I have like flashbacks to like Touchstone 90s movie trailers. In a world of betrayal. Young Sean Connery. All right. I heard Gerard Depardieu farted in a hotel bathroom in Paris and they had to evacuate the building. John Stamos, Rob Lowe, Paul Rudd. Again, Paul Rudd's husband material, not. John Stamos creeps me out. I feel like Rob Lowe's a sociopath. Swayze, Roadhouse, Swayze, anything. Is this SLD? No, it's 2 red candles consecutively. John Goodman, but not the current John Goodman. The one from Roseanne in the 80s. Matt Berry. He's got a lot of charisma. Michael J. Fox, pre-Parkinson's. But the hand jobs are probably better now. Too soon? Why does the cult behave the strangest on FOMC days? Anyways, not a cult. Because they're boring until something happens, right? Too soon? He's had Parkinson's for like 40 years. I think he would have laughed at that joke. And that's what matters. Options are getting too expensive. Don't buy them. What? How do I shock you people still? Hottest guy is buff Korean Jesus. Don't at me. Korean Jesus is ripped. Gigi Peng. Men of Power. Hot. Samuel L. Jackson, literally in every movie, and nothing kills him. That's true, actually. Chris Pine, but not from Star Trek. I feel like he's soft in the head. Is that politically correct? Like, I can imagine Chris Pine being one of the kids in the sped class. They prefer the term daft. Mark Wahlberg's another one who's kind of a moron. Colin Farrell in Bruges. Okay. Danny Masterson. Who's that? Colin Farrell in The Batman? Was Colin Farrell in The Batman? The rapist from the 70s show. That was his character? No, he's in jail. Hyde? I never really watched that 70s show. You gotta be more specific. Farrell was the Penguin. Huh. I'll give you his legal name. That's pretty specific. Curly hair, glasses. Oh, okay. I know which one you're talking about.
Thank you so much, Dana. What happens after NVIDIA 880? 885? The curly hair glasses is more. Yeah, but I didn't know which character you were referring to. I don't know their names. There's like the nerdy kid, and then there's the redhead. There's Mila Kunis. There's Ashton Kutcher. Some other guy. There's the Mexican dude, and then there's the old guy and the mom. Is that all of them? I think that's all of them. Mila Kunis, it seems like I should be attracted to, but yet I'm just not. That's fair. What's happening with DWAC? Why the hype? I don't know. I'm not hyping it. Something Trump shit. I don't know. The rapist from the 70s show. You've got to be more specific than that. Are there multiple ones? Trump has to pay his bond. Oh yeah, that's right. He's got until this week, right? We just summed up 4 years of American history. Some Trump shit. Yeah, exactly. Think we'll lose 75 here, or doesn't matter? Probably not. It also doesn't matter, but probably not. That's until the 26th. It's gonna be really hard to run his campaign from jail. I mean, there's no way he like liquidates Mar-a-Lago to fucking pay his bond, right? His kids will be so upset. Rich people go to jail. Sometimes you fuck around and find out. Like Epstein, yeah. I don't know why Lily skydived 15 minutes ago. See if there's some news, maybe? Elon is gonna pay it for him. Hmm. Yeah, that's not a conflict of interest in any way, right? There's got to be like some billionaire like QAnon conspiracy theorist, right? Who'll just give Trump all their money. Maybe there isn't. Maybe QAnon's only for the poors. Isn't that Elon? No. Elon only cares about himself. He's far too narcissistic to ever give someone else power. Why doesn't Joe Rogan bail him out? Kenny doesn't have any political affiliations. He just donates to everyone. Like a Chad. I think we're just finding out that all the Republican billionaires don't have that much money. It's almost like billionaires don't actually have a lot of money. Which is crazy, right? But it's absolutely true. Or they know they won't get it back. Oh, that too. Can't get taxed if you technically don't have it. Cute guys in politics? Don't we like music in here? What are you trying to start a war? Are you holding a straddle into 1 p.m.? I have a straddle. But I'll probably hold it after 1 p.m. People are focused on Trump having to sell real estate, but the first thing the New York AG would seize would be bank accounts and brokerage accounts. Yeah, but those probably don't have enough money in them. Also, they're not going to seize anything. They're just going to put him in jail. That's what a bond does, right? Play the Bear and Bull songs simultaneously to hedge against Vol Crush. I bought the straddle I have right now far enough out that I don't think I have to worry about too much Vol Crush. Maybe a couple of percent. He just asked for the Supreme Court to give him immunity. Interesting. How's that going? Dog the Bounty Hunter will front run Trump. Will front Trump? Who's more strong and resilient, Trump or Biden? Steel cage match coming. God, that would be boring. I don't know how she can seize anything when there wasn't any crime committed. It's a it's a civil fraud case, right? So it's a fine in a civil fraud case. The crime would be not paying the fine. He didn't defraud anyone, though. He was found liable in a civil fraud case, which grants the state the right to levy and sell his assets, lien any of his real property, and garnish from anyone that owes him money. Are you unaware of the state's powers? They're ample. Well, he can appeal the decision. But in order to bring, I think in order to bring a case forth before the appellate, you still have to post the bond for the fine. So if he wants an appeal, he's got to post the bond. Yeah. Bit of a sticky wicket, isn't it? Yeah, it is. It is a sticky wicket. He can appeal without a bond, but the bond prevents the AG from seizing his assets in the meantime. Yeah. He should go subset. I know JPOW is a binary event today, but he has to know he needs to be hawkish, right? Does he? Really just depends on the scope of the data that the Fed is willing to consider to make their decision. As much as he wants to be dovish, he has to know that's bad. Sure. But again, it has to do with the scope of the data that they're willing to consider. He's only one vote. I'm not even in a civil case. I'm not even sure that the appellate would overturn the original ruling. I mean, maybe they could call a mistrial based on legal error or something. If you look at super duper core inflation in South Central Wyoming, you can see that we're going to be fine, and the JPOW has every right to be dovish. All three of the residents there are doing just fine. Beef prices are up. And they have 2 senators. That's 1/3 of the population. Oh, Jesus. We still got another fucking hour and a half. Why is there a chicken shortage, but not a shortage of wings? 4 wings, 1 chicken. Let's show some AMD cons. since yesterday. Average down this morning, peeled one of three off at 80, another off at 97. Riding the very free runner. Excellent way to not overtrade SPX on FOMC day. Nice. My solution was to sell short strangle and then just do nothing. Close the short strangle before the meeting. I feel very nervous when Mr. Poopy Pants is not here. Are we sure he's not here? Any more economic data? Thursday, Friday. I don't think there's a lot. We have like some PMIs for... I think we have S&P PMI. Home sales. Japanese inflation, and then that might be it. Probably Fed speeches. We'll probably get some Fed speeches following the meeting. But yeah, not a ton of stuff this week. The week after we get what, GDP and PCE. Each chicken has 4 wings. Yeah. They got the little drummy piece. And then the little flat. And they got one on each side. We're talking about the food wings. I'm not talking about the chicken's actual wings. If you take 2 chicken wings, the wings of a chicken, and convert it to food, you get 4 wings. Chickens do have cloacas. That's correct, Edmund. Is Poopy still employed after advising his clients to miss the insane run last year and go into bonds instead? Probably, yeah. Bonds did better than the S&P at the end of the year. They're wing sections, Gherk. 2 drums, 2 flats. But if you held one up, would you say, ooh, look at this wing section? Do you order them as 4 wing sections or 8 wings? I heard something about a chicken from Costco, and the inside was green due to some disease or the chicken grows too fast. I'm never buying their rotisserie chicken again. I've never bought their rotisserie chicken in the first place. That's where I expect you to keep your eye, NW. I don't want you to miss any hot quotes. My local wing chef has OCD and will not serve me unless I call them wing sections. They'd just be more desirable food because then you could turn 1 chicken into 12 wings. 16 wings. You got 4 wings on the... Yeah. 16. Color was a chicken that returned to Costco by that one lady. I didn't see. Oh, I know what you're talking about. Yeah. I don't remember what color the fucking chicken was. It was just bones. It was just bones in a rotisserie chicken container. She was fucking pissed. She was like, this gave me the shits. Just right there in front of the entire customer service line. Sounds like a biblically accurate angel. Delicious. A lot of the Costco take and bake food gives me the shits. I don't even eat food out of that aisle. It's all disgusting. It is not. Yes, it is. All those like prepackaged dinners where it's like a plastic tray with a bag of food in it. All of that shit is nasty as fuck. They make it right there in the store. Oh, that stuff's disgusting too. But just because their recipes are bad. How's positioning looking now? The same? Almost nothing has changed. We did get a bit of calls that sold off on the most recent drop, but that was it. And it wasn't even a lot of them. Almost nothing has changed except IV is almost double what it was at market open. Yep. It's like an intraday savings account. For an event like FOMC, is there a way to avoid IV crush without selling theta? Well, fortunately, IV doesn't crush out until the very, very end of the day. And even then, like IV is already going up because of the decay, right? So there's generally not a lot of crush on them unless you choose poorly. Want to see something funny? Go look at 0DT XSP options, their liquidity. Some of the strikes are bouncing $6 every few seconds. Have you tried just like selling one? I remember FOMC in 2022. 0DTs became more expensive into 2 p.m. Yeah, it was awesome. You could buy like a straddle at open and then sell it for more money at the same exact price at like 130. Judge McAfee will allow Trump team to appeal Fannie Willis decision. Okay. He still has to post the bond. That's 89 million deferred. What about the other 450 million? He's working on it. Seriously though, for like those of you guys that are Trumpers or whatever, what are you gonna do if your boy goes to jail? Like, I don't really care either way. Both of them are pretty likely to die in office, right? What are you gonna do if he wins? I don't know. Same shit I do every day. They could both go to jail. That may help us. Interesting. Conjugal visits between each other? I mean, do they have jail retirement homes? Maybe, like, I don't know. There's probably some, like, white collar prison for 50-plus-year-old men. I don't know that Biden isn't Pete Buttigieg? How do you pronounce that? Club Fed. My mother-in-law's neighbor donated $1 million to Trump on 2020. I don't know how to feel about that. I mean, you can laugh at him. They spent $1 million and lost. Buttigieg? Huh. My friend's girlfriend went to the Jan 6 riot, like as a spectator. Djibouti? No, different. Buttigieg supports conscription. What do you mean, like a draft? Why does someone need to support that? He's the first openly gay closet Republican. What about that guy in Florida who's a drag queen? Can I start a fund that says up to 100% of donations go to Trump and then just keep it all? I mean, you'll probably get sued. You mean secure? No. Isn't the Boeing guy a drag queen? I don't know. I mean, if he isn't, he will be soon. Ron DeSantis? Yeah, that one. I'm hungry. Hmm. Gib tzatziki recipe, please. You get like a container of whole fat Greek yogurt, a couple cloves of garlic, chopped very finely, olive oil, salt, dill, fresh, grated cucumber into a cheesecloth, and then squeeze all the water out of it. Stir, let rest for like 2 days. It's pretty simple. You can salt to taste after that. It's not just strain. You have to squeeze all the water out of it. Mint isn't really traditionally Greek, which would make it not tzatziki. Mint, there's a different name for the mint one, I think. And I think it's like Lebanese. Or Persian. Iranian. Maybe Turkish. How do I season my carbon steel pan? The potato skin method or the oil oven method? Oil oven. Why are Persians such good cooks? I think most elevated cuisines come from regions with lots of agricultural production and a broader or a more diversified culinary base. So generally where there have been empires in the past, with the exception of your home, Great Britain, they would have had access to lots of spices and trade routes, which would have influenced their cuisine. The best tzatziki I've had is Hidden Valley and banned. Do the English consider boiling a spice? Only if the water is dirty enough. If you get your water directly from the Thames, then in fact, yes, it is a seasoning. Is ranch dressing a hot topic here? No. That's just disgusting. I'm gonna be gone on vacation for a bit, so this is a super compliment with many compliments in one. Gherk is the most immensely regularly handsome pickle-themed finutainment streamer in all of YouTube history, times like 10. Thank you so much, Baradactyl. I hope you have fun on your vacation. Tell the Gherks to be safe and not to wander outside of the resort. Nobody gets their water from the Thames. Too many sewage overflows into it. Yeah, strange. It's strange how there were so many cholera outbreaks in the late 1800s to early 1900s, isn't it? No, ranch is just disgusting. Asking if ranch dressing is hot is like asking if pepperoncinis are spicy. It's just bland cream that people put on their food to make it slide down their gullet more easily. Just remember, London has more Michelin stars per capita than New York. But none of those serve British cuisine. I mean, here's the ultimate insult, Edwin. the peak of British cuisine is French food. It's just food you stole from the French. That's the pinnacle. It sounds debatable. It probably, I mean, per capita, right? It's got a modifier. Do you think New York Michelin stars are American food? Nope. Some of them are. Some of them are also French food. But it doesn't matter. We're a melting pot. We get to lay claim to all of it. Just culturally appropriating all of the cuisines. Why? Because we're American. Fuck you. What is British food? Fish and chips, beans and toast, tea and crumpets, meat stuffed into breads. Don't forget those. Pies. Sunday roast. Bangers and mash. Spotted dick. The taste of their food and the beauty of their women made the Brits the best sailors in the world. How can you forget jellied eels? Because I don't want to think about them. MDMA and whippets. Yeah. How long until FOMC? 1 hour and 9 minutes. It's eels from the Thames. What's American food? Corn syrup? Well, yeah. Yorkshire pudding's just pancake batter put in a muffin pan that's too hot. One hour and 9 minutes from the press release? Yes. American food is fried chicken and burgers, both of which are better than anything the British have ever made. All of the cuisines have America's contribution attached to them. I mean, no cuisine that exists in America is like really. I mean, like you can go to some restaurants that are, but for the most part, they've all been modified heavily to the point where they're really not the original cuisine anymore. Italian food, Chinese food, Japanese food, you name it. Olive Garden is purely American. Yeah, soul food. What lack of knowledge do I have about British cuisine? Just how much worse it actually gets. I can't believe there's someone defending British cuisine. You just overrate what you call American food. That's not a very good argument, Sergeant Pig. I went to Ireland and Scotland, and the best meal I had was Papa John's pizza. Ew. It all pales in comparison to the rich history of Canadian food. British food greater than American food, even if counting stuff that wasn't stolen from other countries. Do you like Peruvian food? Eh, it's okay. It's not my favorite. Jambalaya, etouffee, po' boys, gumbo, muffaletta. I mean, Cajun cuisine is pretty uniquely American. Several of the cuisines that originated in the South are. Italian food in America is about as far from actual Italian food as you can get. Tex-Mex, yeah. Italian food in the US is definitely worse. I mean, it just depends. It's not traditional, it's not the same. There are dishes that are just not Italian, like a lot of them. It doesn't make them bad. They're just not Italian. They're just another evolutionary branch of Italian cooking. Like uh um cheese stuffed pizza Italian? No. Well, not really. How high do bulls need to pump to get out of their positions? Like 52.25? Eggplant parm has both Italian and American versions. Yeah, and the Italian version is fucking disgusting. So not everything necessarily gets worse. I mean, like if you go to a curry and get a curry in England, most of that is not traditionally Indian cuisine, right? It's been modified and developed to appeal to the taste of a different country. It doesn't make it bad. Ingredients in Italy are a completely different level. They're just different ingredients. They're not a different level. They're just a different ingredient. They're better, Gurk. Come on. I mean, you can get San Marzano tomatoes grown by some dude who lives under a lot on the, in fucking Naples, right? Like under a highway overpass. Or, you can get San Marzano tomatoes that are grown in California, right? And there's biologically they're the same fucking tomato. Just because some shithead sprinkling his ancestors' dust from Mount Vesuvius on it doesn't make the fucking tomato that much different. It's the like Americans, like Italian cuisine traditionally, and northern Italian cuisine specifically, leans more towards the use of fresh ingredients that are locally sourced than the vast majority of American cuisine. But when Italians came to America, they adapted their cuisine to the produce that was available here, and that gave way to a new cuisine. Whether that cuisine is worse or better, that's, I don't really think that's an argument that can be made. You know what's not Italian? Tomatoes. And pasta. Yeah. Nothing is really anyone's. Yeah, that's true. It's... If it's not Native American cooking, then it's not American. Okay. So if you're not eating the dishes of your Celtic and Saxon ancestors, then it's not really British. Have you just chopped a chunk off of a pig and thrown it in a pot with some tubers recently? Yes, you do, Carl. Do Brits still make Forever Stew? Yes, it's called Sunday Roast. The Thames smells almost as bad as the sun. Just letting you know, I picked up some delicious pho, oxymoron, and it's awesome. Don't believe you. Keep telling yourself that. How did Italians make food before they had tomatoes and pasta? They ate different food. There's whole books about like Roman cuisine and stuff. It's drastically different than modern Italian cuisine. SVX tick up, believe it or not. Puts up too. Yeah. Yeah, I draw down my port like every quarter, and then I usually put that money into longer term investments, dividends, treasuries, that kind of stuff. I just use trading as a way to generate capital. I'd probably eat beans on toast before I ate a slice of Papa John's pizza. That shit's fucking disgusting. It tastes like foam. To lose 5,100 by tomorrow if the dot plot shows no rate cuts at all this year. If the dot plot cuts all 3 rate cuts, it will be probably very bearish. Fed fund futures will price out the rest of the remaining rate cuts for the year. Maybe they'll leave one, but only if Powell leaves room open for that, right? It is foam? Oh, there you go. What's the best chain pizza place in your opinion? They're all pretty awful, but when I've been stuck in various cities in the Midwest, I don't know if these are current, but the pan pizza at Domino's, if you make them do it well done, is almost tolerable. And then stuffed crust pizza, just don't eat the pizza, rip all the stuffed crust off it and just eat that part. That's Pizza Hut. Both of those things will give you indigestion and make you feel bad about yourself. But that's what happens when you're in a food desert. See you later, Wiggly. The last time I ate Domino's pizza was in Dayton, Ohio 20 years ago, and I got really sick. The last time I had Domino's pizza, I was in Boise, Idaho. And there was just nothing else. It was like 9 p.m. and the entire city had closed. And that was 9 years ago. Dave Portnoy is a fucking dipshit. What were you doing in Boise? Working? Well, sort of. I didn't have a choice. I had to be there. Food desert in the Midwest. Where the fuck are you at? New York City? Sounds like smashing some chick. No. No. Can you see my comments? Yeah. That doesn't mean I want to respond to them. Let me know when you're in the Midwest next. I'll show you the way to great food. Hard pass. Just on going to the Midwest at all. I will never go to the Midwest again if I can avoid it for the rest of my life. You never do when I'm on my phone, but usually do when I'm on my computer. What mean? Why are you such an attention whore? Was it your dad or your mom? Which one didn't love you? Was it both? Any thoughts on Midwest girls? There's some diamonds in the rough. Jen's from the Midwest. She's a hot librarian. It's because I was beaten as a child. Great way to ruin everyone's mirth and fun. Surface Smurf. Oh, it's like, I'm gonna bring up my childhood trauma. No, not you. Cookies and leche. Surface Smurf. Did you time him out? Carl, stop perpetuating the cycle of abuse. What happens if Jen is Darth Jan's alt account? I would know. Some of us are straight up diamonds, no rough, but you're in the rough. Like a golf ball that has flown off of the green, right? Which Always Sunny character do you relate to the most? It's tough. It's gotta be Charlie or... Actually, no. I think Danny DeVito. I feel like you're a Dennis. I'm not a Dennis. He's a psychopath. Gherkin is Frank. J-Fresh is Charlie. You call yourself a god regularly? That's because of my powers. Dorcas Cricket? I'm the lady who turns herself into a cat. Is this SLD? Also, no. Futures are about to run into support here, though. Looks like we're gonna get a massive drop to 51.74. Where'd the bulls go? They tried a little bit earlier to do some things. A couple times. Alright, I'm gonna get some food. I'll be right back. If Gherkin's an average guy, I could see him working at a sports authority. I hate sports. Bulls went to full port DWAC. But you do like having authority. No, not really. I don't have any kind of weird power complex. I'm gonna go get food.
Ooh, $72. Does the color of my shirt have that much of an effect? That's weird. Hmm. Can you give us a pump-up speech before the meeting? Don't lose all your fucking money. What color dong thong do you think J-Pow is wearing for the presser? French summer lavender. What's up, Danwich? How you doing, man? Someone dumped 11 million on SPX 5300 calls for October. Probably sold, right? It's an awful lot of fucking theta. Maybe, yeah. Could always pull them back, right? They're not going to be very reactive to spot. Win by 2Ds? Not today. They're too expensive. How many Degen X did you just do off camera to necessitate a shirt change? I was shaking a bottle of vinegar and it exploded. So I was making this salad. It went poorly. "23 months later, and I have started to maniacally write on a whiteboard, piecing together all the reading and such." Look at you go. Nice, I have a whiteboard. If SPX rips green, is it because I touch myself at night? Yep. I have a brown board. That's for chalk, popcorn trader. How do you effectively play a straddle during higher volatility? That's an excellent question. You hope that one side prints, and so does the other. Or you buy enough data that you don't care. Play the outcome, not the vol. Would you suggest stop limits on SPX 0 DTs that are set on straddle legs? I mean, you'll probably get stopped out of both sides without really making any money, but that's kind of the deal here. Hmm. Interesting. Is XND like the mini NDX? Kind of, yeah. Are there any parties privy to the information before it's released at 1400? Not that I'm aware of. The president shouldn't be informed either. How would Carl's wife position for FOMC? Tight strangle. Usually like 4 or 5 days past the event, volatility will drop off pretty hard. Depends on the importance of the event, but... Later, John. Hmm. Well, those are almost the same fucking price. Jesus Christ, Ivy's insane. Are you ready? Sure. One second.
Sorry, had to take that phone call. Yeah, big green candle. Just zoom out a bit. I'm gonna do all the things. Still haven't tested 5200 though. Maintaining the current rate. I was just bringing up all the PDFs. Not a lot of change in their press release narrative. Let's take a look at their projection materials. All right. I can just pull this up for you guys, I think. Let me shrink it a little bit, though. So you can still see the SPX. Hold on. You guys can see that, and then... All right, so it looks like GDP projections moved up a little bit. Unemployment projections don't seem to have changed much. PCE is looking like 2.4 for 2024, 2.2, 2025. So they moved PCE up for 2025. And core PCE inflation projections have moved up significantly for 2024, but flat for 2025. They're still projecting 4.6% by the end of the year, which is still 3 rate cuts. 3.6 to 3.9. So higher Fed funds rate through 2025 and 2026. $2024, the majority of participants agree on 4.6, although one appears to be at 4.3. It's actually pretty split, and the rest are 4.75 or higher. It's 9. Yeah, 9 9 to 10. One guy wants the rate to stay the same through 2025 also. All right. Well, we'll see what Powell has to say. They shifted their 2025 projections and rate cut estimates out, but they left 2024 the same. Still 3 rate cuts, but the decision's very split, 9 to 10. A big chunk of participants think we should only have 2 cuts. About the half of those that think we should have fewer cuts think we should only have 1. And the other half of that, 0. And then, so it's kind of like 1 for 0, 4 for 3, or 4 for 2, and then 5 for 3, and then, or was that right? It was 2 and 4. It was 2, oh yeah, it was 2 for 1, 2 for 0, 2 for 1, 5 for 2. There we go. And then we have 8, or I'm sorry, 9 for 3 rate cuts and 1 for 4. Nice. Two feds, 1 cut. Is there a 1-800 bets off for the stock market? I need to get out of the clown market, but it keeps drawing me in. Obviously, I've been wrong a year, and the market is soft landing. I'm out. So buy calls. Whatever. See ya. I guess they went with dollar destruction and stagflation. I mean, they went with no change, right? But it pushes out policy expectations. What's funny is we're not even pricing in 3 rate cuts yet. Mm-mm. The 30-year is confused. Aren't we currently at 4? No, we're pricing in 70 points, which is less than 3. J-Pop better be really fucking indecisive about that 3rd rate cut going into the presser. Otherwise, we're going to get some hot inflation. So this is good news? It's not inherently bearish. I mean, it's really nothing. So the only thing they can change at this point would be the narrative, because the governor's vote was split. Which one of them voted for 4? I'm going to assume it was J Powell. Another FOMC where they sit on their hands. Yep, they keep hoping something's gonna break, but nothing's gonna break when our fucking neutral rate is at like 1.8. One 1.5. If it looks like a cuck, walks like a cuck, and sounds like a cuck, it's JPOW. I mean, the only thing Fed Fund futures are waiting for is for him to open his mouth. Serious question, are these people bot or just fucking dumb? I wouldn't say they're bought. I would say that their interests are not aligned with what you feel their interests should be. Very silently, the Fed is there to protect banks, right? They don't care if your fucking eggs cost more. It's one of their mandates, sure. But, you know, that's mostly so growth can be secured in the future, right? They don't want all the poors going completely broke. He's not going to be hawkish, is he? If he isn't, watch out. We're going up. He could handicap the Bulls here, but I don't think he's gonna crush them. They need to say recession, or say that they're gonna keep rates where they are until they see signs of a recession. This is one thing they could say. He can work very hard to clarify that they don't think a June cut is likely. But they didn't want to remove it in case inflation falls rapidly. And that can leave the market at the mercy of the inflation data. Then if inflation that way, if they make that statement, if inflation prints hotter, then, you know, the Fed's fund futures will price in fewer rate cuts, right? They'll price us down to 2, or close to 2. That's about it. What if Powell says, fuck your calls, you're idiots if you think we're cutting any time before Thanksgiving? But it's still in the dot plot. I mean, last time we got 3 in the dot plot and the market priced in 6. Right now we've got 3 and the market's pricing in slightly less than 3. The reaction's obviously drastically different, but 3 is too many. And they're, by doing this, he's letting inflation run hotter, right? So if he lets inflation run hotter, and then he doesn't make any move to tighten financial conditions through narrative, then we're gonna get to June, and the Feds, like, they force themselves into committing to excessive action by doing this. So if we hit June and we're at 5% annualized inflation, or 5.5% annualized inflation, then they've got to cut all of the rate cuts, right? So they're really hoping that the long run trend in super core ignores the last 4 months that it's been going like this and just returns back to its long run trend. What happened to your VIX 16 play? It's in the margin side of this account. I closed the sold puts on it. Left open the longs. It's incredibly childish thinking by them. Well, the problem is that the conflict in the Red Sea is really not going anywhere. And that's what they need, right? Is they need that to resolve. They need shipping costs to go back down, because that's applying inflationary pressure against all core goods and services, right? Supercore's current 3-month annualized rate is at 6.4%, and the 6-month is at 5.87%. The long run is at 2.4, and the Fed's projecting it goes up to 2.6 by the end of 2024 right now. But in reality, it could go up to, 5 or 6% very quickly. And oil's still Brent's at 85 a fucking barrel. And WTI's at 82 a barrel, which is, $4 and $8 above where it becomes an inflationary pressure. Not to mention, slow output from refineries is increasing gas prices on top of that. Shipping costs going down aren't going to stop the inherent problems in the US economy. No, they're not. But it'll look better on paper. If JPOW doesn't say anything naughty, this is going to rocket into end of day. There's a very good chance that that's true. He kind of needs to say something naughty. But positioning is still pretty neutral. So nothing's really changed. Yeah, a little couple spikes and volatility, but everyone's waiting on the presser, it looks like. So we're going into that with a slight bullish edge, simply because we're on that upside ramp. What are you taking positions? I have a longer dated straddle already. Let's Might be all I do. Unless I see something more definitive. IWM's reaction was nice and healthy. You're right. That's ultimately what it is. They have no idea, and the data that they use to project is inherently flawed. Long dated straddle is an end of month. Yeah, that's where I bought it for. You had to go out pretty far to get past the IV. IV's crushing out sooner than expected. The strangle I was looking at for Friday expiry is $200 cheaper than 30 minutes ago. Okay. That might not last once the presser starts, just so you know. What do you think there will be? War escalation with Russia or some proxy? No, we don't even need that, right? We just need the conflict in the Middle East to continue to persist while OPEC continues to cut back production, right? I mean, that alone is enough to drive oil prices higher. Yeah, I'm going to stream the presser. Of course. I'm not rooting for anybody. I'm rooting for the Fed to not fuck our economy for a half a generation. Because of our hubris that inflation will simply fall on its own. Too late. Might be. Yeah. Any updates on positioning? Mostly unchanged. Still skewed bullishly, but neutral. JPEG just keeping the banks happy. Yeah. Hoping that the moves by Japan are enough. They're not. I mean, really, Japan raising rates to 0 to 0.1 is effectively a 0.1 to 0 cut on the Fed, right? I don't feel like we don't talk about VWAP much these days, but it's always there. Something pithy like, don't Arthur Burns the economy, idiot. Yeah, well, might be a bit late for that. 0.1 cut. So, but there isn't going to be a 0.1 anything from the Bank of Japan, right? Because their effective rate is 0, and bond buyers in the JGB market are going to ensure that it stays 0. It's going to require that people short the yen buy JGBs in order to push the effective rate down. But, I mean, the impact on leverage may not be that meaningful. Leverage moves from, what, 10 to 1 to 7 to 1, 8 to 1. Because the spread got tighter? Yeah, marginally. Yeah, FOMC minutes are neutral, but no change to the rate cut projections is the problem. I expected neutral, but they should have cut the at least one of the rate cuts for this year. And they're leaving 3 in place. Although the vote is almost evenly split, it still fell in favor of no rate cuts. Or fell in favor of 3 rate cuts. Sorry. If JPass says mean things, can we close at 5,100? They're going to have to be really, really, really mean. Like, he's going to have to basically say, yeah, we have a 3rd rate cut on the dot plot, but we really don't have any intention of cutting rates 3 times. And that's going to be tough to swallow. And if you undermine the dot plot, that doesn't really instill confidence in your decision making, right? So he tried that already, like back in December when they realized they fucked up. And he was like, oh, well, you know, the dot plot's like, it's not really our projection. It's, you know, we just fill out a bubble. And so the market was like, oh, so you didn't mean 3, you meant 6 rate cuts. And, you know, there we went. Yeah, I have the presser. Should be going live in a second here. Oh, here we go. What could a realistic range be? I have no idea what he's going to say. Right now, I would say that chances are he doesn't say anything nearly hawkish enough and we pump. He's going to have to claw back a lot of the decision that they just published in order to mollify any bull positioning. And that's a, I mean, that's a really bad look for a central bank, right? To literally publish a decision and then try to claw it back the same day. I doubt he does that. He's tried that before. It didn't work out well. The market didn't listen to him at all.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity
No, it
and
hasn't.
inflation.
Nope.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance.
No, they're not.
I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials.
I don't think he
food,
believes anything
housing,
he's
and
reading at this
transportation.
point.
We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment.
This looks like a hostage
Considering any
video. We're
adjustments
being
to the
treated
target range for the
well.
federal
Ignore
funds
the
rate,
fact that
the
I've
committee
lost
will
30
carefully
pounds this
assess
month.
incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined
Welcome
by
back,
nearly
Wiggly.
$1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress, and thereby facilitating the ongoing decline in our securities holdings, consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you. Microphone, right. Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming as I pointed out in my opening remarks.
He definitely grabbed
we did
his
mark
ear.
up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down, and so.
You've made no progress.
Just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing, services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
And will you be able to get overall inflation down to target if housing
Positioning
doesn't
isn't
break through
changing
quickly? And does that
much.
affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We
Still
will.
neutral.
And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Nick Timmeros of the Wall Street Journal. Chair
Yeah,
Powell,
silver and
during
gold
your
are both
congressional
moving really
testimony this
hard.
month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I
It's
said
actually a good question.
in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see
Say it.
inflation come back. And if we ease too late, we could do unnecessary harm to employment and, you know, people's working lives.
No,
And
it's
so,
necessary
you know,
harm.
we do see the risks as
Call it
two-sided.
what it
So
is.
it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But you know, we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, you know, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that, you know, you still need? Or by June, is there enough data for you? Just give us a sense of your thinking there.
Sounds like you're ignoring
Yeah, so
them.
we make decisions
Yeah.
meeting by meeting, and we didn't make any
The
decisions
Fed wants to have
about
its
future
cake and eat it
meetings today.
too.
Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
I mean, just a question of, I mean, is there even enough?
Is he not addressing the March reading? No.
We'll take.
He just said they're annualizing core
things can
CPI
happen during an
back
intermittent
from
period if you look
Feb.
back. Unexpected things. So,
So
I
not
don't
the
wanna-
March
I
print.
wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to.
Do we have an
to begin the
upside
process of
ceiling?
reducing
There's
rates
still
again.
resistance
There's nothing
at
in the data
90
pointing at that,
and
but
5,200.
those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris?
Hi, Chris Rieger, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about what might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an
Synthetic
uptick
shorts
in
at
the longer run rate.
5,200.
And also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving,
At what point does
large
rising
things
inflation
like
with expected
demographics and
cuts turn
productivity
bearish?
and that sort of thing, things that don't move quickly.
I mean, the
But
bond
I don't think we
market
know. I mean,
doesn't really
my
agree with
instinct
Powell.
would be that rates will not go back down to the very
doesn't
low
look
levels
like
that we saw,
currency markets are
where
agreeing
all
with
around the
him
world
very
there were
much
long
yet,
run rates
but
that were at or below zero.
The dollar did drop.
In some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year.
That's correct,
It's already
Carl.
or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence to the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again.
Well, just are you still optimistic that you'll get the confidence you need this year?
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year, and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
See you in a bit, man. I'm going to tell you next
Janice
time,
Malik, The New York
I'm
Times.
assuming
Thank
you
for
got
taking our
blown up
questions.
on the
Before
decision,
you're commenting
don't
on that a
over-leverage
weakening in the labor
binary
market would be a
events
reason to potentially
in one
cut
direction.
rates, or at least a consideration in making a rate cut. Would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now? And in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on how the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying
all these people asking questions know the answer to their question, probably know everything is fact.
Now here are some bumps.
They're
and the
sticking
question is,
to their narrative bias.
And we can't know that.
The Fed
that's
is.
why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from Well, the Federal Reserve is an independent body, understanding Congress has oversight over that. We received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they, well, first of all, I respect, in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 24 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write
When
careful
do bears
responses
move
and
to
address
rescue their
concerns. We listen,
positions?
again, because we're talking to the people who, in our system of government, have oversight over our activity. So that's, but at the end of the day, we take that on board, but we have to make our judgments, and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Not today.
Claire. Thank you. Claire Jones,
maybe
Financial
tomorrow.
Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent.
The
It's something that
5200
happens.
synthetic
Life
short's
goes on.
there, right?
And
I
it's not a
presume it's
problem.
still there.
We've always had dissents, and so and you.
It doesn't
you
expire
respect thoughtful
today.
dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat
It still
dissents
draws
with
price to
real respect as well.
5200 to a degree, yeah.
Simon, one would be okay.
Zero DT positioning gamma is going to be
with
significantly
Can you hear me?
more.
Yes.
Okay.
However,
obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state
mean the sound
in
isn't working?
2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How tight is how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing, essentially, and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what
Seems
we're
like
really
a lot to
looking at
continue our run from November.
Slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the
not
idea.
There for it, but
that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress. And that can cause you to prematurely stop
a lot of the
process
bullishness is
avoid the stress,
0 DT.
and
I
then it
don't
would be
see
very hard to
a
restart.
significant amount of position
as something
building
like that
further
happened
out.
in 19.
It seems like there's still a lot
perhaps.
of uncertainty.
So that's what we're doing. We're looking
Despite
at what
moving
would be
into
a good
the
timing, what would
higher
be a good
part of the
structure.
call positioning.
And, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
The majority of the gamma on the chain right
run
now falls off between
is
like
to
Friday
return to
and the end of
balance
the
sheet that
month.
is mostly treasuries. I do expect that once we're through this, we'll
Still not a ton of
come back
interest out on
to
the
the other
OPEX
issues about the
for
composition
April.
and the maturity, and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Was that just now? Bank of Japan just announced they're
Victoria
weighing
Guida with Politico.
further rate
Also on the balance
interest
sheet,
increases this year,
Can you talk a little bit
according
about
to
how the outlook
Nikkei.
for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully.
In the middle of
But
the Fed
one of the reasons
meeting,
we're slowing down.
Rude.
Soon enough, fairly soon, I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators the last time. This is our second time in doing this, and I think we're going to be paying a lot of attention to
Japan
the
and USA
things that
Fed.
started to happen and that foreshadowed what
Sort
eventually
of.
happened at the end of that tightening cycle, where we wound up in a short reserves situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking
Japan woke
system
up at
as it
4
was
a.m. and
around,
chose violence.
For example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates. Those sorts of things.
It's
we will always be
0.1 to
watching the banking
0.2.
system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
I think we broadly think that once the overnight repo stabilizes either at 0 or close to 0, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Go to Jean. Hi, Chair Powell. Jean Young with
Pretty
M&I
much
Market News.
above the
I wanted
majority
to ask
of
also about the balance sheet.
the call positioning for
Well,
today.
you said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower, you can get farther. But that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point, ultimately, where you stop allowing the balance sheet to run off, but then, from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand, and then that ultimately brings you ideally in for, brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to again find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Hi, Nancy Marshall-Ginzer.
I mean, it's just going to increase the swaps lines pricing of an additional rate increase at the April meeting.
Can you just sum up more specifically what data you're looking at that would give you that confidence?
Sure. So most importantly, we're looking at the incoming inflation data and the contents of it and what they're telling us. So that'll be, and also the various components. So obviously that's what we want. We want more confidence that inflation is coming down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including
you'll need a lot of calls to come in to really push this higher, right?
But the most important thing will be the inflation.
We're kind of near where the top of this is probably going to be for the day. That doesn't mean we're going to pull back. It's just there's
wages is one thing. We don't.
It's kind of hard to move price
wages,
at this point.
Really inflation. We would look to the fact that wages are still coming in very strong, but they've been wage increases. That is to say, wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not originally caused, I don't think, mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
Let's go to Greg.
Are you gonna sell
Thank you,
the 30?
Greg Robb from MarketWatch. Chair
Maybe.
Powell, could you say at this
I don't know if we're
meeting
gonna get
whether there
close
were
enough for
more
it to be worthwhile.
officials who wanted to be careful and go slower than about rates than were at the last meeting?
I might
Was
sell
there-
the 20.
Was there that sense of maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that
Did they Pearl Harbor the
suggests
FOMC?
that we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that. So, I
So
think
the
generally
economy's
speaking,
death warrant
it
being
does go in
signed
the
here.
direction of saying yes, it's
There's a very good
appropriate for us
chance
to be
that-
careful
yes.
as we approach this question.
Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff.
Why?
We've been hearing a
Who gives a
lot
shit?
from Republicans in Congress about what the Fed is.
Is
or
your
isn't
half of
doing in
Bitcoin
the digital
plummeting?
dollar, but folk, I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks
Nerd.
like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of a CBDC. Can you give us
What's up,
any
John
clarity on
Smallberries?
what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder.
Dropped out of the game to go work, saving the
so
youth of today.
We
Are you trying to get TikTok
not
banned? I still
getting
check the
ready to
S&P and
we
dream
haven't
of playing
proposed- we haven't come
spreads.
to a conclusion
Another
that we
day
should
soon.
propose
Another day, John.
or anything like
Good to
that,
see you, man.
that Congress consider legislation to authorize a digital dollar. And it would take legislation by Congress, signed by the president, to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with.
So let's not talk about relevant financial policy items. How do you feel about
What
bartering
we are doing,
using
and I
Krispy
think what
Kreme
every major
donuts?
central bank is doing is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications in wholesale finance, in the payment system. And so we to
Still a
serve the
wave of
public,
maturity
we-
hitting
these
this
issues
quarter,
have
right?
become very
Yep.
front burner in
Yellen's
the
still out of
last
control.
5 or 6 years.
Doesn't know how to
We
rein
need
it
be
in. Did the
knowledgeable
BOJ
about all that.
just
So
make
we actually do have people
make
trying to
bank
understand
bulls lose
things that
liquidity?
are- but
I'm thinking
it's
if they
wrong
will
to say
pump
that
it
we're
much
working on a
higher or
CBDC
limit it
and then
again.
We've secretly got a lab
The
here where we've
BOJ
got one, and
announced
we're just kind of
that
springing it on Congress at the right moment.
right
We
at the
don't.
right at
No,
the
and
3
I
o'clock
haven't
mark
at
that
all in my own
they're
mind
considering another
made a
rate
decision that I
increase
think
at
this
their
is
next
something the
policy
US
meeting.
should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader payments landscape.
So they waited to
That's-
see what the
that's
Fed
how I
was
would
doing and
characterize it.
then pushed a rumor, right?
Thank you. It's
BTC
Mark
up
Hamrick with
5%,
Bankrate. Mr. Chairman,
not from
April
its high.
27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
I generally think, this movement actually started, 30 years ago, when some academics posited that a more transparent central bank, if the public understands your reaction function, the markets will do your work for you. They'll react to the data. And so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that.
It's a
So
stupid
Chairman
march.
Greenspan did, Chair Yellen did. And so we went from four press conferences a year to 8. So now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We have an annual supervision report, financial stability report. There's a long list of things that we've done. I think nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media. And so that channel is full, I would say. So I think it's generally broadly helped and made things better, but not every day and in every way.
Well, to follow up, has there ever been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
Let's go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Not to harp too much more on confidence and inflation, but you did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from receiving the confidence needed on inflation to begin cutting rates. So are you still of that belief or not? What are we to take by those words, not far?
So let me say my main message at that in those 2 days of hearings was really that the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal, and we don't expect that it will be appropriate to begin to reduce rates until we're more confident that that is the case. I said that any number of times, so those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February, 2.8%, the estimate, and that we have been seeing PCE, core PCE, coming down by 10% every month, I mean, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
No, because the inflation's going
we'll just
up.
have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see
Yes, you did.
more, and we said
You
it would be
announced a
bumpy,
fucking pivot.
And now we have January and February, which I've talked about a couple of times.
Well, don't forget December and March.
We're looking for more good data, and we would certainly welcome it.
Thank you.
Thank you.
Well, that was a shit show. Ugh. No round of applause? No, we're past that point. Jupo incapable of hawkishness. It's not really confident in his dovishness either. I mean, the Fed's trying to position themselves in the I don't know, we're data dependent mode again, but that doesn't have any effect on financial markets. Congrats, everyone. Inflation is coming down. Yeah, if you only look at the inflation from last year, it looks great. Let's ignore the pressure that's been applied to the supply chain for the last 4 months. That has almost immediately turned into realized inflation on the consumer side. All that's really happened in the last 2 years is that corporations have gotten more efficient in pricing inflation forward onto the consumer. I mean, his answer to everything was, I don't know. Gas is $7. Well, Tom, it was $3.75 last week, so it's all good. Yeah, exactly. Which is actually inflationary. Yep. At some point, they're going to price the consumer out, though. I mean, as long as wages stay up, then they won't. But if markets keep moving up, then they're going to stimulate the wealth effect further, driving more demand, driving more inflation. against what is not the most significant supply shock in the world, but it's coming at a very, very bad time. Well, he's left it entirely in the hands of the market to decide the Fed's policy path forward. The bond market doesn't seem to believe any of the dovishness. And the Bank of Japan shit in the middle of the meeting, I mean, it's not significant, but Japan's now basically announcing a positive rate. So the Fed didn't move, and so the Bank of Japan is immediately pushing a narrative that they're going to move to a positive rate because they don't want banks leveraging up the carry again. %, Japan reacted. Yep. Yeah. Back to our regularly scheduled program. Gherk, where does the market maker want this to close? Let me see here. I mean, would it shock you if I told you 51.90? Because that's kind of where their hedge is at. This is very blown out to the upside. This is almost all of the 0 DTE positioning currently in the money. Doesn't look like an excessive amount of 0 DTE positionings coming in. I would say the most interesting thing about the move up is positioning didn't really move. I mean, we moved into it, but like the aggregate positioning at these levels has stayed the same. There really aren't more calls. I mean, they're fractionally, but there really aren't more calls. There really aren't more puts. Mostly nothing's changed from this morning. I mean, I can kind of just show you here. And the only factor that's changed significantly is moneyness. So we still have a pretty significant amount of put interest at the, well, that's not gross. Hold on. Do gross. The out of the money stuff has largely fallen off. There we go. Hold on. So still have puts at 5,200. Obviously the calls at 205, 210 are now in the money. The 25 and 30 calls fell off. So we're mostly around this 215 level, which is, you know, roughly the upside projection for today. We're a little higher than it right now, but we're probably not sustainably. Now the important stuff is done. What about the tips on Beyond? I haven't looked at those today at all. Yeah, Beyond actually looks like it's getting a bit of shorting. Nice bounce back, though. Back up now, what, almost 10% from when the news hit. Still on reg show. Are we above monthly VN? No, we're not. VN on the monthly is, I think it's pretty far out of the money still. Yeah, VN on the monthly is at 53.57. Most likely holding 5,200 to cash settle the 0 DTE at this level. I don't know. The puts, we got 30 minutes. I don't think we're going to see a hard push from the put positioning. SPX now up 28% since the Fed stopped raising rates, and we still don't have a confirmation of a rate cut. This is insane. Yep. Well, they only have 3 major meetings left, right, on which to cut rates. Well, 3 more dot plots, at least, for the year. Does the MM positioning matter at all here? I assume even a pullback here would just get hung up on 5210. It could, or the 5210 could sell off. I'm not really going to bet in either direction. I assume that we're going to get more bullish positioning for tomorrow. I think I'm just going to stay in my straddle. I don't think it's a good time to close it because leverage is likely to increase. And that should drive prices higher. But I'll take a look at tomorrow's. Give me a second. Is the Japan news bearish at all? Yes. In the sense that everybody just piled into JGBs and they just announced they're going to raise rates. So like you were saying, outlook for the next quarter is just a continuation of this rally. I mean, the Fed's not going to stop this rally, is basically what we got today. That doesn't necessarily mean we get a continuation of the rally. It just means that the Fed is going to do nothing to halt it. The economy's good unless you want to buy a house, a new car, or find a new job. Or you have to eat. How will J-Powell being a cuck and Japan's response with interest rates going to affect the carry trade? Will it unwind quick with all the volatility? Probably not in advance of a decision, but if a decision is made, then yes. We may see some unwinding. There was a knee-jerk reaction in the leverage on the trade at the moment of the announcement, but that may not last. The weekly chart looks hilarious. Yep. Up 1% every single day until the market implodes. It's a bit hefty. Time to buy 60 DTE 210C on IWM. You didn't buy any IWM calls before today? SPX 6K end of year is no longer a meme. Why do you need so long? You think J-Pow knows something the rest of the market doesn't? I don't think J-Pow knows shit. That was the least emphatic speech I've ever seen him give. And he's given some really dull speeches. If they don't do anything, we're probably going to 5,600 with only mechanicals to stop us. Is this still on the table? Yeah. How long can informed participants keep huffing bull hopium? Well, I mean, we were kind of running into a wall prior to the FOMC meeting. This will probably loosen that up a little bit, and then we'll probably find another wall to run into. Jesus, end of week? No, that's ridiculous. But we could hit by June, I mean. If earnings season is good and GDP is up, We can't buy JGBs, can we? You can. How do we gain exposure? There's like ETFs that track the Japanese bond market. You've probably missed a bunch of the buying because now people are going to want to short it on the hopes that they increase interest rates. Not worth playing anything on this end of day. I feel like price is kind of pinned. I mean, I guess there's some possibility that they let it dump a little or calls sell off, but I'm not going to bank on it, I don't think. Maybe as we get really close to the end of the day, there might be something worthwhile. But it's very possible we could just get more buying out on tomorrow, where we have plenty of buying. Pretty solid ramp for tomorrow, up to 52.65 already. Yep, we moved above the green box. Just barely, but $5. $7. The next upside resistance on ES is at like 52.30 to 53.50. We got room on the SPX weekly up to 52.67, 52.66, which is my next upside target on the technicals. We're above the prior high, so that's already bullish, right? I haven't felt vindicated being a bear since last March. Last March sucked. We didn't even drop after the banks failed. We just went up. You mean October? October was pretty nice. This mad dash higher on leverage is not... I mean, you shouldn't really be bearish here, not overtly. I feel like I should sell my 440 SPY Vega put, buy another in time. Smart or dumb? We could see VIX move down, so it would probably be better entries. Was the meeting good for Beyond? No, it doesn't really, I don't think it really has a big effect there. It's good for IWM, which is in turn good for Beyond. Does this FOMC price action look similar to July's FOMC price action? There's similarities, yeah. Both in the price action and the options data, but that doesn't necessarily mean we'll see leverage continue to reduce. What are yields going to do now? I mean, they're down a little bit. Mostly the 2 and 5 year. Their inflation projections were higher. So probably not a drastic effect on yields. I mean, you can look, the top end of the curve at least is mostly where it was. Big effect on the dollar, but not so much the yields. And even the dollar is still at like 103.40, which is where it was a couple days ago. How are you managing your deep out of the money puts? I sell them in vol spikes, or I roll them. I have a pretty decent number of them right now. Most of them bought around like VIX 12. The ones I have left, VIX 12 and like just above 14. The more recent ones I picked up were at 14. Those are down a little. My older ones, not super affected by the drop in VIX today, but it's not great. Those are more likely to get rolled out than the newer ones I've entered. I closed a bunch of them when VIX went to 18, 17, 18 that one day. I'm opening them past June, September, but I still have some June puts. They're not really very affected by Delta, right? They're mostly affected by moves in Vega or moves in VIX, and VIX has been pretty fucking muted, right? I mean, it's just been trading between like 15 and 13 for the last month. With the two spikes that we got. But that's my only like bearish positioning that I have. I guess I have a TLT short, but that's still up. I might get hit on a stop loss there. Maybe not today, but maybe tomorrow. You think there's a chance of de-risking and we head back down into the downtrend, or has this opened up bullish price action for the next couple of weeks? So even if it doesn't create a strong bullish move, which it probably will over the next couple of days, or a stronger bullish move, it's very likely that prices will stay elevated longer as more and more Vega risk falls off the chain. So we may continue to see less compounding of short puts, right? And less put leverage, like put leverage falling off overall, mostly because available leverage is dropping, right? The change in the carry trade does do that. Since they're only bulls in the market anymore, how the fuck aren't they fighting to get their straddle puts back in the money? They aren't making enough on the upside move to cover the loss. Yes, they are. As someone with a straddle, I can tell you that it more than paid for the puts. If you had a straddle with any, if you had a straddle with any theta today, you're up quite a bit. Let's see, where are my colleagues at right now? So I opened them yesterday at 40. They are currently 68.60, 50. Yeah, they're chopping around a bit. And my puts. Let's see, my puts I opened yesterday at 34 and they're 15. And I could just sit on them, right? Given this pump, I'm assuming J-Pow was dovish. He wasn't really dovish. I mean, he just stuck to the "we're not doing anything" script. But there was no change, no effective change in the Fed policy or narrative. They're a little more clueless, which he indicated several times. Fuck, man, that's bad. It's not bad in the short term. Don't buy puts because it's bad, right? Don't be a fucking idiot. I don't know why people have so many puts. We haven't fallen below gamma neutral. Maybe I don't make myself clear enough. Nothing is bearish above gamma neutral. And I'm not talking about gamma neutral on the weekly. I'm talking about gamma neutral on the monthly. JPEGs, I mean, the Fed and the Treasury, I don't want to blame one and not the other. They're both equally responsible for the mess that we're going to be in. That makes it hard to be bullish. I understand that. But you need to be if you want to make money. So pack your feelings away and buy the calls that will print, right? If you want Vega positions and you want to buy them when vol is low, that's fine. It's a perfectly acceptable hedge. Don't overextend yourself into them. Who gets most of the blame, J-Pow or Yellen? I mean, they had to work in concert in November on the pivot, so I blame both of them for that. Now, we'll see. I mean, the Fed's indecisiveness is bad. I'm not gonna sugarcoat it. It's very very bad in the face of rising inflation. It would be better if the Fed chose a policy of action over reaction. I buy calls and they fucking stop out at -30, -50%. Those are some wide ass stops. It's not as easy to be a bull as it sounds. It's very frequently easier to identify tops than bottoms. When you're intraday trading, it's fine to buy puts. There's no bias in buying puts on the intraday, right? You're just saying the price has reached a level where it will revert back from. You're not saying the market's going to crash. Just don't buy puts that say the market's going to crash or we're going to get, a 500 BPS correction, unless something is indicating that we're going to get that, which would be first and foremost a failure of gamma neutral. It's really hard to be bearish when the market maker is buying all the fucking dips, right? Is there like a 4-day period in the last, like if you bought 5 DTE calls, right? Forget the intraday ones. If you just bought 5 DTE calls at any point in the last 4 fucking months, money. Does JPEG want to be liked? I mean, they're worried about banking risk. They've leaned so heavily into their current policy that it makes it very hard for them to turn it around. It sounds like you know from experience. It's easier to identify tops than bottoms. Yep. Was the market maker in the room with us right now? Physically? No. Spiritually, yes. Have you tried summoning them? Things don't last forever, Goric. True. Do you think GME could run a bit for earnings? Oh, Jesus fuck. Why do everyone keep asking me this? Yeah, it can. I have CCs out, and I don't feel like closing unless we can run to, like, 20. We could. If it ran to 20, wouldn't you just want to get assigned? Their earnings should be good, if that's any consolation. And today's information should apply pressure to IWM. So small and mid caps, respectively, should see some performance improvements. Powell taking a reactionary stance is bad because the Fed actions have a lagging effect. In addition to the data, they're reacting to being lagging. Yeah. Yeah, so you're compounding the lagged effects, not only of the data, but of the Fed's policy decisions as well, right? He needs to, I mean, in order to stop the wealth effect and stop inflation from compounding, which I think 4 months of inflation data more than justifies, he should have taken action now. Because when he decides to take action, well, I don't say he, but when the Fed decides to take action, it will be too little, too late. So we get to the next meeting, right? 6 month annualized super core is at, let's say, 6.1, 6.2%. And the Fed moves forward with, even if they cut all the rates off the table and move forward with a rate hike, that still puts the neutral rate effectively below. We don't have a neutral rate. We'll have a negative rate, a negative neutral rate. So not restrictive, right? So then what, right? The next meeting after that, if inflation's continued to move higher, then they have to escalate, right? And it becomes an arms race like we had in 2022 of the Fed versus rising inflation, where they're like, well, we're going to do a quarter point, we're going to do a half a point, we're going to do 3/4 of a point, right? And then inflation doesn't care. It'll just keep going up. Because the money is there to push it higher, frankly. I just like how devoid of all reality these meetings are. Like, we have a shrinking population, growing amount of debt, productivity is flat, and rates are a byproduct. No increased, no risk is priced in. Yeah, that's accurate. And yet he's not, so a shitstorm must be brewing. Oh, fucking Japan gonna save us from our own... I mean, that's gotta be the hope. What, Japan goes to a quarter point, half a point? Let's hope their inflation is hot as fuck. They don't need to increase GDP. He just said, I mean, like, here's the thing. Like, so the Fed's like, okay, we're going to raise rates. And here's our policy. Like, here's our policy goal, right? 1.8% growth. Right? This is the point at which growth becomes inflationary. So anything above 1.8% is going to be inflationary. And so the Fed was like, this is what we're going to target. We're going to get growth in 2024, 2025 down to 1.8 to 2%. We're going to keep it there. We're going to hit the economy with some ice and cool it down. They didn't do any of that. GDP for 2023 came in at 3.2%. That's 1.4% above the inflationary target, right? It's fucking, yeah, almost. And then growth for this year, I mean, while moderating a bit, is not moderating anywhere near their fucking target of 2.1%. And we look to be on track for like 6% nominal GDP. Which is going to translate roughly to what we saw last year, 3.1 to 3.2. Still inflationary. Yeah. Cutting down the balance sheet. He kept it pretty low key. No, he was talking about slowing the rate of the balance sheet roll-off. Which is maybe the last thing, maybe the only thing the Fed is doing that actually tightens financial conditions in any meaningful way. I just can't get it through my thick skull. A 520C? Nah. Get rid of the first number. Don't think about the first number, right? I should listen again. Yeah, that's... I mean, they're talking about effectively... They're talking about slowing QT, which is an even more dovish move, and cutting rates. Because they're afraid if they cut rates, they're going to hurt the banks. And so they want to ensure that they've committed to enough balance sheet roll-off that if banks need more reserves, they can step in and provide them. Yeah, it's really fucking bad. Buy NVIDIA calls because ups the rest of the week. You know, NVIDIA's, I mean, it's performing okay, but it's not performing that well. Don't forget about pulling back Basel 3. It's Basel 4. It's just... Basel 3 is already in place. Basel 4 is what they're targeting. But... Yeah, he's been very wishy-washy on that. I mean, there's a lot of risk to the banks. The banks aren't in a position right now to increase reserves. Not at all. They won't be for years. And so all of the wishy-washiness is probably just like a delay tactic. That's why they're, like, well, we're gonna pass this through committees upon committees upon committees for years, because ultimately it's something that we want to commit to, right? Because it'll be necessary to keep the U.S. on par with the international banking state. But we're not in a position where we can do that right now. My trading view bookmark just says that yes, rest of the day I made it. It says 3908.50. Crazy. Yeah. Market bullish because Daddy J Powell promised a rate cut at every FOMC for the rest of the year. Pretty much. I mean, also market just bullish because we had a shitload of 0 DTE calls above 5,200, right? So once we broke 5,200, it was straight up. As far as how the market really feels and the moves that are being made, I mean, gold's at 21.85. That's not a marker of confidence. Silver's up 230 points. Dollar didn't really drop much. Yields haven't pulled back much, especially for an FOMC meeting. And Fed fund futures still aren't pricing in 3 rate cuts. Even though there's literally fresh data on the table that says 3 rate cuts. So, I mean, you know, I think everyone's well aware of what's going on at this point. And informed participants are less likely to lean into more risk. But that can mean stagnant, right? And that puts us at risk for stagflation, which we've kind of been in anyway, we just don't admit it. For a long AMD entry, you want to go long AMD currently? At 180, despite the fact that they guided down for the rest of 2024? That would imply that you think that the directors of AMD are lying to their shareholders about their performance for the rest of the year. Markets have historically crashed when rate cuts begin, yeah. Do you see gold rallying much more after recent gains? As long as currency risk is compounding, then gold should move up because central banks will continue to buy it. Also inflation. I don't at this price, but I'm not sure how low I should wait for it to go. I have a buy order set for 160. I mean, are you buying it or are you trading it? If you're buying it, I mean, AMD is currently massively overvalued. You're paying for a lot of future earnings that may or may not come to fruition. If you're trading it, you know, it found some support today on its lower trend. They're pretty close to its low trend. I would say if it bounces back up above 183, it can maybe run again. But that's not the same thing. Might be a good entry for a long fixie position. Yeah. I don't think just yet. I mean, it's pretty obvious that they're still going to push the rate, like the Japanese terminal rate closer to 0, right? And as long as bond buying persists in the JGB market, we're probably going to see yen move down, continue to move down from where it is, which is already pretty significant in the last 2 days and is only getting worse. It's almost back where it was at the bottom of November. Pretty close. So there might be better entries on that. Tell me how bad Tesla will dump. Tesla's bouncing right now. Ooh, it's retesting gamma neutral too. Yeah, I'm not entirely sure I don't like a short on Tesla here at all. Tesla closing above GN today. GN, not GM. Let me find out. Oh, ding ding. Let's see. So GN is at 72, so it's over gamma neutral. Delta neutral is at 77, so it's still under DN. If it breaks delta neutral, and I mean, call buying really hasn't picked up very much yet, but it's starting to. If it breaks delta neutral at 77, it could run as high as like 190 to 200, I would say, over the next couple weeks. Gamma max is at about 200 right now. That would move up. Yeah, I would say 190. 190 is like a soft target. Before you go, shouldn't BOJ news suggest that banks can't leverage up the carry trade so they can lose some of their pumping power? They can leverage it up, but they can't leverage it as efficiently because they need to act in the stead of the Bank of Japan or the Japanese Ministry of Finance in keeping the yield curve under control. So, you know, say they could leverage 10 to 1 before, and the Bank of Japan was there to absorb the impact of that on the yen. They now have to absorb that impact themselves. Yeah, so slightly reduced margin because some of that money is going to have to go back into JGBs. But if Japan were to raise again, there is no way to get back to a zero rate, right? And that starts to expose risk. I mean, the move by Bank of Japan to choose between 0 and 0.1 was very, very smart. Because they no longer have to commit their reserves to stabilizing the yen. Anybody who wants to leverage the carry trade has to do that for them. So they get to pass the cost of that off, right? Which, you know, I'm sure they're very worried would affect their relationship with foreign financiers. But that kind of becomes the cost of doing business. I mean, obviously, the spread is still very wide and very advantageous. It is just less advantageous. Instead of it being, you know, 5.43, it's 5.33 that could fluctuate to 5.23. And if they raise rates again, then maybe it goes to like 5 point. Then it's just solidly down because rates would be inherently positive across the entire range. Even if they try to pin rates to the lower end of that range, they would still be positive. That's why the announcement from Bank of Japan today in the middle of the Fed meeting was so interesting. Oh, XSP works the same way SPX does. So it's the difference between spot and strike. And yeah, I've let them settle before. So you have like XSP call, say today, right? Say you had a 520 and we closed at like 522, right? Or 522. This will just settle for $2 times 100. Can you clarify if you think 52.65 is more likely to happen before a pullback to the 51.75 ballpark, or is it a toss-up? I'm trying to cut some stuff not yet at risk. I will say this much. Tomorrow's expiration looks quite bullish. There are calls from the 52.25 level that incrementally ramp up to 52.65, but the transition from 52.50 to 65 is still kind of weak. The downside is quite well defended. So 52.20, 15, 52.05, 5,200, plenty of in the money calls. Below 5170, the chain still flips bearish. There's not a ton of in the money call positioning like there was, but there's still a decent amount. Cobra, welcome back to Pigeon Whale, you dramatic son of a bitch. Thank you so much. But let me go into some of the data from today instead of just talking endlessly about the horrible mistakes that our Fed has made. So this puts us kind of right at the top of our bullish range for the day and above the near-term trend. We could mark another trend here at the top of the day from the prior breakout. However, I think this still has room to go up. If we go out to my actual TA chart, that one's just for options data. I would say that we probably have range into the end of this week up to... That's not quite, that's the wrong one. Wrong trends. Okay, there we go. We probably have range up to the 52.67.40 test by the end of this week, which is roughly where the options positioning is topping out right now as well. So I would say that that's pretty well supported. J-Pop cut my song. Here. Five DT calls tomorrow if we don't just open at 52.50. But we'll see. I mean, obviously we'll check and look at, leverage and see if that's still declining. There are other factors in the market besides just Powell, right? Many of the mega caps, I think a lot of people feel have topped out as far as their valuations go. I know there's some contradictory statements to that, but it's very clear that participants are pulling back their bullishness everywhere, right? Even on today's news and announcement, we didn't really move up all that much. 90 BPS. This is not like a 300 basis point day or anything like that. The additional options on the chain are really only pricing in like another 85 BPS of moves, and then the options just kind of falls off after that. We're still seeing a shift in vol, right? We're still seeing some interest in getting some of that short vol pulled back. And so we can see if those changes continue to persist. But I would say that, yeah, initially things are going to be pretty bullish. Commodities down. Oops. Dollar down. Yields fairly stable. Looks like the dollar might be kind of finding a floor here at 103.40 again. Correlation turned around, but just a little bit. Then that's true on the 3 and the 1 month. So dispersion still hasn't recovered or anything like that. Yield curve turned up a little bit. Forward yield on vol down. Not too much change in the carry trade. It kind of deleveraged and then, risk back on almost immediately after. Remember, if they leverage up the carry trade more, that's going to tighten financial conditions, right? And so keep an eye on that because that pushes the dollar higher. Uranium up. Yeah, that's a commodity index. It looks at a bunch of different commodities and aggregates them. Move, I don't think it's late enough for that to have updated. Skew was up a little bit yesterday. 60% of the S&P trading, 66% of the S&P trading over its 20-day average. And then, yeah, this didn't actually shift that much, about 1%. So a little bit more short vol interest. Something I do want to point out though, gold. What is it? GC1. Gold shot up a bunch. Mostly, I think mostly with the Bank of Japan announcement. Both with the Fed decision and then further on the Bank of Japan announcement. Tested 2191, which is a new high. It's been very, very stable above, 2150 over the last couple of weeks. If currency risks are elevating, which they would, with Japan collapsing the carry, we could definitely see this move higher. So keep an eye on that. Also, as just an indicator of risk, a runoff in RTY is possible. I would monitor that. It's probably going to outperform NQ and ES, especially if it starts squeezing off the larger part of the short positions. Now that the Fed rate decision is behind us, are you increasing your beyond position? I bought a little bit today, when we were kind of at our lows. I picked up like 5 more synthetic longs yesterday. I still only have like 30 contracts total. I'm not gonna allocate like a shitload of leverage to it, right? It's highly risky. But I've got about I don't know, what's that, like $3,000 in it or so. I might put another 2 in over time. Or, on confirmation that it's continuing to move up and it looks like it's stably staying on reg show. I do want to stay long it until the ETF FTDs start to come due. So I'll probably do that. Are my 4050 Ps toast? I thought you had 4500 Ps. They are for now. I mean, I'd roll them if you plan on keeping them. It's expired out of the money. Oh, Jesus Christ. Wait, hold on. Never mind. How did 4500s expire out? You just held them through the whole run up? You're just lying to me, Popcorn Trader. Moody's downgrade coming on no confidence in the Fed. That's an outlier that could be considered, but it's probably going to be more centered around budget talks and next month, I think? Do we get it this month? Does anybody know when the next hearing is for the budget? How far did we push it out? April or March? I've watched my Jan 2024 4000 Ps go from plus 800 to negative 400 per contract, but I still have faith. Yeah, those ones that far out really don't move around a lot. Wait, are we buying fake meat calls again? I picked up a couple yesterday and today. Not a lot. It's shelf offerings I don't like. But at least now I don't have to worry about markets going down and dragging the price down and providing liquidity, right? Also went up for BNED by 10,000%. Well, BNED's never going to go up 10,000%, probably. But it did go up 17% today, which isn't too bad. I'm confused. Is it Sunday? No, I'm over this. I'll see you guys later. It seems like the BOG has maybe had enough of this. If they move to a positive rate, it could absolutely impact the yen much more. The 0 rate didn't really do much. In fact, it lowered the yen. All right. Thank you guys so much. I will see you bright and early tomorrow for the next leg of our bull run, right? All right. Have a good night, everybody.